GETCRACK. Wake up, motherfucker.
Hey, what's up? What's up? So, market is closed. Let's see what we got here. If you remember from last time, I told you guys to watch out for operation options expiration week. And I guess we finally got our drop. After waiting for so many days, I was waiting. Okay, let's see what we got here. Bitcoin did all right, though. Bitcoin's fine. I like the way it's shaped right here. It's building its little cause. So it undid all that damage on Thursday here. You got found a bottom overnight from Thursday night into early Friday morning. We're back up here. Doesn't mean we're ready to continue up. No guarantee it'll pop over the weekend like it did last weekend, but I am liking it. I'm liking this shape. That means we'll have a good run to December. So I suspect we can make it quite easily over 100. I don't know how much higher. Are people going to get really greedy and try to push it really early? I'm going to show you this. I'm going to show you this thing right here. Okay, let me pull it up, and I'm going to play this video for you. This was my price target. I showed this before. Okay, let me pull this one up for Bitcoin. Okay, here it is. Here it is. You see that? All right. So first target will be about 140,000, and then the next one will be 185. All right. So there could be what could happen. I'm actually going to have to go to a Zoom call right now. They're going to discuss Bitcoin stuff with the cycles, but I think the first peak will be around April, and then maybe the second peak will be about November. So it's kind of similar to what happened the last cycle we had in 2021, where we had one peak in April, then a second return peak in there. But this time, maybe it'll be like a smaller peak at the beginning, and then a higher peak in November. Okay. And then after that, it's done. We're done with the Bitcoin cycle. So we have to prepare for other things. At that point, it'll be oil and gold that'll take over from then on, right? So from sometime around the summer, gold will try to get, and silver try to pick back up. I think palladium, platinum might be the first one to move, starting from maybe first quarter, second quarter. So maybe from December, we'll finally hit some point where palladium, platinum will start moving up ahead of time. So I think that depends a lot on Russia, though. That's too much on Russia. So this is it, and I'm going to show you a video. I didn't watch this one yet. The Wyckoff guys did their own analysis, so maybe I'm wrong about how I did this. So you can look at the point and figures, and I'll probably have to give a link again because I talked about how to do these point and figure charting techniques. I gave like a link to a search where you go to the Stock Charts TV channel and then you search Bruce Frazier. Okay, so I'm gonna go back to that later, but here.
Isn't that interesting that it went up and touched that minimum objective and then had a meaningful reaction? And literally all the move up has come with the closing very close to the highs, every bar. It's just, there's very tiny tails on the way up above the market. And so this is so interesting to me. If this is truly a big bull run, and it's a gorgeous structure, the bigger you draw it, the more data you put in the chart, the more beautiful it looks. And
so the first target right here, you see they did 93,000 to 102. We're just touching that 93,000 mark. So we're going to hit 102 later on. Now, if we get more aggressive, you see the second count here. So go all the way to the left. You see they have 118,000 to 127,000. So look at the upper left. All right. You see that number there? So if you draw that structure longer, you take that yellow area, you do the counting again. That's 118 to 127. Now let's go back to this. 127. So that's just below my initial target here, 138, right? 1,000. So that's 140,000. So I think we can overshoot and get over here.
Suspect with a market that's as strong as this, that if, let's say, this 93,000 to 102 is a local objective, that it's going to go up to the 102 level and maybe even slightly throw over that before it has a really important pause. And it might just be a backup and nothing more severe than that. I suspect that we could go to the upper objective, which would be confirmation of the strength of the bull run, is when you fulfill your upper objectives in the range, the point and figure range, and maybe even slightly throw over them. That is actually an indicator of strength.
All right. So get ready, guys. I think April will be the first target based on the cycle analysis I've seen. April to May will be the first time zone where we should try to hit the 138. Maybe we could get to 185 at that point. But from there, wait a while. We'll have to do a reanalysis of that. And then from there, I think we can get to another top maybe later on in 2025. Okay. So I got to go to the Zoom meeting, check it out for a while. So I'm just going to present Samantha LeDuc's video first. I'll give this one. And I said I would cover this because I think you guys need to understand how she analyzes things. So this will give you a flavor. It'll probably be a little complicated because they start talking about options in between it.
Introducing the 3-part options course with Hans Albrecht. Get access for free by scanning this QR code.
So yeah, she has a new options guy. I think she's getting more into the options stuff. So yes, this will be maybe something you might be interested. I didn't check out what the prices were. So if you need a helping hand, maybe this is the way to do it.
You'll get some trade ideas, and you'll also get an opportunity to ask us questions. So this is kind of a Q&A, ask us anything format. So feel free, about halfway through, pop in, hit us up in Zoom Q&A, and I'll monitor that for any questions that you might have. Well, we're in hoodies today. It's midweek. We're not feeling very fancy. I love that. And heck, I don't even have earrings on. So I'm really, really interested in getting your thoughts about this volatility crush that we've had, Hans, that yes, you predicted we were going to have one. This was a really big kind of recurring theme in presidential elections. And we talked about it right before, not only the expectation that Trump would win, which we both had, totally separate, but also that VIX would come on down and that would help markets stay bid. Well, they got, in some cases, very parabolic. So from the crypto, Bitcoin, and Bitcoin into this, in the video I had recommended that I knew I was going to be doing into earnings Friday was Square. So that has worked out really well. So we're going to talk about your trades, kind of a review, my ideas as well, but we also both agree that it's time to kind of calm down as we get into this NVIDIA earnings next week on 11/20, and we get through options expiration, which is the monthlies this Friday. So take it away. Give us a feel for what you've got going on in this market review, and then we'll get into some individual plays.
Yeah. So, okay. Great to be here. Thanks, Samantha. Yeah, I mean, it's been an interesting week. We kind of foretold of this big volatility crush. We weren't the only ones, but we definitely played it very well. And we had, I think it was 5 or 6 different plays, different ways to play it that we gave folks on here, on our show here today. And then of course in the member rooms, we gave them quite a few different options to play. Some little bit more exotic, like the option butterfly, which isn't that complicated, and then there were just some simple plays like VXX puts, or VIX puts rather, VXX put spreads, and then the good old SVIX and SVXY plays, which are short volatility. So these are products that have come under pressure the last few months with all this volatility. And so volatility can chop up certain products, as we know. A popular product in the option selling world is SOXL, which is the levered semiconductor. And you can see that even as semiconductors have recovered, the SMH has recovered, the SOXL has really not recovered nearly as much. And so and that's because of this sort of leverage decay. When you get a lot of movement, you get these products getting chopped to pieces a little bit because they.
So this is very important. Listen to what he says about leverage ETFs here.
They're essentially short volatility. So when there's more volatility, meaning up, down, up, down, up, down, over and over again, they get hurt. Now, if on the leverage product, if things just go in one direction, then that leverage can help you. But this hasn't been the right kind of market for those. And for those VIX products, it hasn't been an amazing market either for the SVIX and the SVXY. But finally, it was time to get in. So I run a pure vol strategy as well. I call it pure vol. And I got out of some safety positions and got back into short volatility ahead of the election. And I think the prevailing thought was that we were going to get past that event. And that's the funny thing about volatility is it's sort of it's a big sale after the event. It almost doesn't matter what the outcome of the event is. Volatility would have still been crushed. Even if Harris had won, volatility would have probably come down. I know you were a little bit more bearish on that outcome. So we'll never know for sure. But sometimes just getting through an event is enough for that volatility complex to relax. And then we talked about it last week. The MOVE index started coming down. That was something that was concerning us, that underlying rates volatility, because it speaks to other things, right, that are going on, maybe debt issues and maybe inflation, a number of different cross currents that can lead us to the sort of high level of rate volatility. So let's show everybody here for a second.
Yeah, I had a theme that we needed all 3 to come back down. In other words, the treasury volatility, equity volatility, and oil volatility. Right. We definitely have the equity VIX crush. We had the OVX all.
Hey, sorry guys. So it looks like, I don't know, StreamYard's probably crapped out here. But let me see if I can put this video back up.
Introducing the 3.
Okay, let's see if it restarts.
The equity VIX crush. We had the OVX volatility crush. MOVE is still being a little persistent. So we do not have the trifecta.
You can see the TLT is under pressure. We had just a little bit of a pullback in rates, and now I had a butterfly in TLT. Actually, I've had it on for a few weeks now, And I took it off. I said, I'm not liking the looks of rates, and I don't want to bet against Druckenmiller. That's probably never the best thing in the world to do. So, but I'm going to take off the risk. I've done really well on the strategy, and sometimes that's the tricky part is not just putting on the trade, but knowing when to take it off before that gamma level gets too high, that negative gamma. So when you get close to expiry on your options, you have less benefit from that theta decay, from that sort of nice juicy sleep at night decay that you make, that money that you make, and the potential for movement to really undo a lot of your hard work and potentially go the other way. So you're always kind of balancing those. And I generally have a rule that sort of under 30 days, I start to think about closing, certainly under 25 days. And there's certainly a lot of data out there. If anybody's an option seller listening today, there are some studies out there that show kind of 21 days and under is where things kind of flip the other way. You probably want to take positions off. Now, that doesn't include weekly option sellers. There are people out there who love to sell 0 DTE. Forget about weekly. They're selling 0 DTE. So all the rules are out the window at that point. You're kind of flying by the seat of your pants. But if you are a sort of typical 30 to 40, 45 day option seller, you're kind of looking to close at a certain point before movement kind of starts to hurt you. We can see here that this was our happy picture. If I had a big happy stamp, I would put it on the right side. This was our unhappy picture on the left side. So we have the VIX high. This is before the election. VIX futures fairly flat here and very concerned in the front when that front future is higher than the next one. You can watch this at VIX Central. So this is a great way for you guys out there to look and kind of.
Okay, so this is a term structure. If you ever did futures trading and things like that, you got to know terms like contango, backwardation. I think one time, John was mentioning it on 24-hour stream randomly, and we were talking about that in terms of bonds, how bonds have different interest rates on their curve. It's similar idea here with the futures. Okay, so when you have bonds, you have different durations, right? 30-year, 10-year, 20-year, 7-year, 5-year, 3, 2, and 1, and then all the way to 6 months, 3 months, 1 month, and sometimes even some weeks, depending on. I don't think those are popular, but anyway, they create a curve depending on the demand of where people want in the duration. But futures, kind of similar idea. So in this case, what VIX futures means is like people are betting on how volatile the market will be out into the future. Okay.
Keep track of how concerned VIX futures markets are vis-a-vis the VIX, which is in green here. And then after the election, we have this beautiful shape here. This is what we like to see. This is what leads us to markets like we've had lately, which is, we're down 30 points, we're back to even. S&P drops a little bit, it comes back to even. That is not unusual in this kind of market. So unless we get some sort of fuel, some sort of spark that gets us moving to the downside, we can probably expect more of that and sort of a movement around that 6,000 level. And now you're getting a lot of options being sold in the market, dealers getting saddled with all these option premiums, a lot of cover call sellers coming in because VIX 14, 15, now we're under 14, touched under 14 today. There were some good premiums out there. So people are going to sell premium, especially going into the seasonal period, and a lot of other positive things that are happening as well. So, but with these VIX products, basically you've gone to sort of regimen where the SVIX and the SVXY can make money over time. It's not a massive amount. It's playing this movement of futures into the cash, and that's why these products go up. But remember, they're not based on the VIX. They're based on the VIX futures and their relation to the VIX. That's that and the front two futures. So that's something very important to remember.
So some don't care about the VIX. They are really kind of not so comfortable trading it for lots of reasons, but they can still use it as a very valuable tool, indicator tool, into not only direction, but also intensity of that direction. So talk about SPX a little bit. I have said the same thing. Even this week going into Friday, wouldn't be surprised if we actually roll over a little bit. And I gave those particular levels, not very far, but we still have to get through NVIDIA earnings next week, which is still pricing in a lot of upper level calls, little call spreads, so that right tail that we've also talked about week after week after week is still there. But semis have not made a push yet.
So that was a lot of jargon. Like she said, tails. She said this. I mean, there's tons of jargons. When you go into options, it's a whole world where you open up a dictionary and it's tons of, I think there's like terms like fat tails, there's terms like skew. They'll talk about skew later. I don't trade options, okay? But I have to be cognizant. If you're a trader or even investor, you should at least know some things about the options market. At the very least, you should understand what happened today. Why did the market go down? It's the third Friday of the month, okay? It's options expiration. There's a lot of people who sell options, the market makers. They don't want all those calls to win. A lot of people bought a bunch of calls before elections, right? They won. They're up. The market makers need to push the stocks back down to make everything neutral. So you'll learn other terms too, like gamma. Like gamma is very important. Like I'm not going to get into it, but if you are interested, I think, you got to either read a book or maybe this new dude here on Leduc Trading, maybe he's the guy to teach you, because he has 3 parts, like beginner, intermediate. Like even if you're not into trading options, I think it is good knowledge to have in your back pocket. I didn't look at how much it costs, so I'm not here trying to shill this stuff, but I'm just saying, for this video, I just want you to understand how Samantha, like, she covers everything, okay? She has a really broad level of knowledge with reading charts and doing options and all kinds of other things, intermarket relationship, macro, micro. I like it. I haven't seen anyone who covers like all these skill sets, put everything together like this. And when she looks at a market, she can see right away. So I've studied all her calls from the past. You can go to all her old videos. You look at her calls, when she called the top, the bottom, this, and that for each sector. She's mostly been right. I haven't seen anybody with a clean record like hers. So that's all I gotta say. You gotta learn from the best. Anybody that's trying to do this type of work, you are trying to find the teacher that has a very good set of skills and are very adaptable. So markets are not easy. They always change. But people should always be able to adapt to the market conditions, okay?
They have actually been languishing. And I want to show something as it relates to my theme anyway. So let me just kind of put this up, which is over here. Yeah. All right. So I have been very, very impressed with the extremely strong move. Hopefully you can see this over here. This is IGV. This is software. There are a lot of SaaS plays, and this has absolutely taken off hot fire flames. It used to be dominated by the Microsoft, the weighting in Microsoft. But since then, a lot of other plays have come up to really kind of take a strong lead. And IGV, as a SaaS acceleration thesis, it has been working really well, and it's taken a lot of fuel or money rotation, since I focus on sector rotation, away from the semis. So a lot of folks are just going to say, oh, because we gapped up on the Trump win and it's just like hot fire flames, but it's also, they were already in play, because every week we've been talking about this, not just every day with clients and setting trades up, but we talked about DOCU coming out of this big base. This is on a weekly, by the way. This is my daily view, and a little bit over here on the hourly, just so if you're looking at this side by side, you don't get confused, folks. But we set this up. We set up Team. We set up PayPal. We set up Palantir. This has been an incredible move. And Twilio. Look at Twilio. I mean, this has gone gorgeous. So every week I've been dropping one, and last week it was Square. So these are all kind of part of the IGV explosion as well. So this was earnings on Friday. I said, believe it or not, I'm not worried about this one. And hot fire flames, it goes higher. But my point of bringing these up is that that's a sector that I saw in rotation and not so much semis using SMH. It's been sitting here sideways. You can see the chop on a daily. It's a mess. So this is where I think we're going to now turn. I think the love that has been IGV is a parabola. We're all parabola traders now. We get a little softening in this space, and we have a chance for the catch-up trades in semis. Could be wrong, but I'm still betting on that. So NVIDIA, of course, is the leader of the band, but my point is I still have this kind of 272 price target for semis. This is now where I want to rotate. So you and I have done this every single week where I have set up, for example, that NVIDIA financed call spread way back here when this came up, and this was September 11th. The market exploded higher because of NVIDIA on September 11th. It was very clear that this was in play. So once we got above that 120 call wall, which we talked about, it was in play. So that financed call spread, which was December, and I mentioned taking half off before the election just in case, but the point was this was selling the 115 puts and buying the 135 by 148 call spread, and it has hit. We've obviously hit the 148, 150 area. This could be very volatile into earnings, but I think it'll still do okay. Semis will still do okay. So right now I want to transition into a SMH play. And that's one thing I wanted to ask you about. I know it's on the fly, you weren't expecting it, but take a look at your metrics. What do you think of SMH into NVIDIA earnings, but giving enough time in case there is a shake and bake?
It's all about NVIDIA. I mean, we've talked about how important it is, how it's bigger than all these G7 nation stock markets, how it's owned around the world, how it's a part of the big passive investing machine. It's just, there's a lot at stake there. And that whole space, it's interesting, your view on I appreciate your view on SMH because the semiconductors, it almost feels like the last man standing. We've seen, and Micron's looking not great. I got out of position today, some short puts for gain. They expire this week, so I wasn't worried about them. AMD, though, I was short some D puts, and I got out of those for, I think, a small loss, actually, because I just started to look a little so-so. And then I'm looking at some other ones that actually had nice pops, like Qualcomm. People jumped on the mobile AI, bandwagon, but it sure didn't last long. So Qualcomm's turned back down as well. And of course, we've got the complete dumpster fires that we know about in SMCI and ASML practically. And so it almost feels like, I talked about it a month ago. I sort of said, well, if, it almost feels like it's a bifurcated market where the money is going to come out of the ones that just aren't in favor, and NVIDIA is going to hoover in even more money. And maybe we're seeing that, but it's starting to make me just a little bit nervous. So I'd like to see that rotation that you're talking about. Maybe we certainly saw a little bit of money come out of the crazy coin complex and maybe push into the mag again today, and also your software names. So let's see how the rotation happens. Again, remember, the market is a male, right? In my view, because it can only think of one thing at a time. And so
oh my God, it's so funny.
I think it's true. So we'll see. I hope so. I hope it happens.
Well, I'm not SMCI. I have been a hater for some time. So this is getting exactly what it deserves. And I still think it will see 12, but it is on a 400-week EMA. So typically it has a bounce here, but honestly, below the 400 is just death. But your other ones, ASML, obviously, it also gave a really good reason down the, for its, on the manufacturing side, they're all the same, CLAC, LRCX. Qualcomm did surprise. I have a trigger here. It needs to get above, but it never did. But all of these, even that you're talking about right now, even Micron, it is still in what I would call chop mode. So it's a little bit of a dispersion trade, for lack of a better word, for those who have been very excited. The other players that I just mentioned that are more so in the software space. So this is where the money has gone, and it has basically not gone here. I wouldn't call that the sellers have really stepped in. I mean, aside from SMCI and ASML, in the case of AMD, they just announced, right, that they're going to lay off 4%. It's in trouble. But big picture, I still think we can have one more run until we're done. That's my bet, right? So I'm looking for that. But SMH as a potential play into 272, and then I think it's done. I really do.
So let's see here. Well, if I look at NVIDIA, Samantha, I see there's always a call wall somewhere, on most of these things, and there's quite a large one at the 150 level. And so we've seen that these walls can have a big effect, like
150 for NVIDIA, correct?
For NVIDIA, okay. NVIDIA at 150. And we've seen these call walls kind of play out. McDonald's has been at 300, Meta at 600. So sometimes, we're kind of, we're a little bit of guessing, but it seems like that supply of stock around there has kind of kept them from going through. We saw that call wall at 120. As soon as it disappeared, Nvidia went for a big run. Now we're at 150. Is it going to happen again? Well, if the numbers are fantastic, the call wall is not going to matter. There's going to be enough organic interest in this thing that, it's not going to really, nothing's going to kind of sit in the way of that. But beyond that, out of the 150s, there really isn't much gamma in the way. So this thing could really, really pop. I mean, it could really go for a big run if the numbers are great. And in my view, I just thought I'm going to sit it out and observe over the next week, see how it sort of shapes up into that number, and then maybe look for a play then. But off the bat, you could play SMH or you could just play NVIDIA. And we saw that. What was that chart?
NVIDIA is off the charts. But
what was that chart I sent you today? I think I sent you one with, here, let me show you guys this thing. I think I showed you one with the Korean semiconductors that have just been slaughtered compared to the SOX. So there's definitely something's going on. Obviously, there's a geopolitical.
It's not a fundamental story that we're in right now with this, euphoric honeymoon reaction with the Trump win. They're pulling forward tax cuts. They're pulling forward pro-growth policies, future devaluation of the dollar, and. So there is a whole bunch of just, buy the rumor, sell the news once we get the policies. So I think that right now fundamentals really don't matter. You can see what happened in crypto land, right? We had coin earnings were awful. I have to show these charts after you do that. But this is a case of Mara earnings were blah, but Riot earnings were terrible here. Let me just show you real quick. Let me just put this up real quick.
Mara had a big pullback today.
But I said 2150, so I'm okay with that. I'm still strangely not worried. So for example, right, this has nothing to do with the fundamentals. Over here, it's better. It's better if you just kind of go over here. This was that 212 that we needed to get and stay above, and then earnings came out and they were awful. Riot came out. Oh my God, they were terrible. Didn't matter. Bitcoin went up, and so crypto, Bitcoin related proxies went up, period, full stop. That's all that matters. So now that we're having a little bit of digestion, now the crowds are watching. Will it get supported, right? I mean, you saw what happened with these plays. You were long. You were, oh my goodness, you got in at 181, you lucky guy. So the point is, this is still the chart to beat. Meaning, so this is still the one that all eyes are on, this Bitcoin advance, which is a liquidity tell, and the whole kind of macro world of holding up treasuries. But for the most part, this is still in play. It will digest. It's very likely going to come back down to, it could come all the way back down to 76. It's still in play. We still have the potential of a growth rotation in semis, in Bitcoin. It's very exciting. But ultimately, at some point, we are going to have to talk about the market having its melt up potential, not just a Bitcoin advance, not just, NVIDIA has been obviously very strong and likely beats, but the market that is still now, it might as well be 7,000. They're calling for 7,500 in some circles because of the expectation of lower regulations, lower taxes, et cetera, et cetera. So for right now, pace ourselves, correct. This week, one at a time. We don't have the euphoria now that the week is over. We know what the cabinet looks like also for Trump, and it's very, very frustrating. Very, very hawk. Very, very hawk. So we have a situation where we have to now start to price in other things. Let's just say other things. But we're not back from the honeymoon just yet. These parabolas are slowly going to revert. We'll get into some actual trades that will be trends. But for right now, you wanted to show your crush scene.
Yes, so let's take a look at Coinbase. So Coinbase, I wanted to talk about this because this is kind of interesting. We had this was really not forecasted. We really didn't see anything like this in the skew going into Coinbase. And I like to look at skew. I like to get into the weeds a little bit when it comes to options. And so we can see here, this is sort of showing where calls are more expensive, and then above the zero line, puts are more expensive. So typically in this space, which is not unusual in gold, crypto, the calls are more expensive. And so this is kind of going into the event, and then suddenly these things sort of move to the upside on the Trump win and Elon being involved in all that, et cetera, et cetera. And then the skew really kicked up. So the calls got very, very expensive. And so what I've been telling people, they've been sort of confused. They said, well, when people are reaching for calls, isn't that very, very bullish? And I said, it depends. So the whole game of skew is really kind of a bit of art and science. So ahead of a move, if you start to see upside call skew really kicking up, that can be a sign that something's brewing. There could be something's maybe setting up for a squeeze. You need something to start the squeeze, but it sets up for potential accelerant, a kind of an accelerant or fuel to the fire. When the move starts to happen, then those positions can kind of continue to kind of create momentum to the upside if there's a true gamma squeeze. But we didn't see that until this massive move. So I said yesterday, well, this is kind of, to me, it looks more like an exhaustion move where people were short, people were covering, people were looking for any way to get involved and protect positions, maybe short positions. And so they really reach for that skew. And I said, this is probably a little bit more, we talked about this in the members meeting. This is more of an exhaustion move. I wouldn't take this as necessarily a sign of more bullishness, which who the heck knows? Coin could go to 800 for all I know, but according to the skew, it looked exhaustion. So a member asked me, what do you think? And I said, how about this 330, 300, 270 put fly? And in basically one day, he made, I don't know, $8,200 or something like that. So these are the kinds of things we do for members at Leduc. We kind of, help to guide them along a little bit. So I thought that was interesting, a little lesson in skew and a nice trade in there as well. And with the flies, you use the flies when vol gets a little bit higher. You want to use those flies because the options get a little too expensive, and most certainly options were very, very expensive after the move that these things had. Very kind of panicking move. And I mentioned yesterday, I said, somebody also asked me, they said at one point yesterday, the VIX was down, but the stock market was down as well, the S&P. And they said, well, that's bizarre. Why is that happening? And I said, well, it got so panicky that upside movement is still movement. And so don't be surprised when you get a very, very big move to the upside, even if it isn't in an area like coin or gold, which typically has big upside skew, you're going to get volatility kind of hang in there because upside moves are still moves. That is still volatility. And sure enough, all the vol market needed was a little bit of a pullback in markets to go, and breathe a sigh of relief and go, okay, this isn't going to get worse. We're not going to 6,300 in 3 days. So that's when volatility actually does the opposite of what you think it might. And it will actually come down with the market because it's a sense that normalization is coming back into the market, which up, all those huge gaps that we had, that's not super normal, and vol will reflect that. First down day, markets go, okay, this is a place to relax. And then sure enough, today we saw markets down a little bit to unchanged, but the VIX continued to get clobbered. And so we've been talking about adding, I talked about it early in the week, and I said, I don't think this is done. I think we're potentially going to keep going on the vol side of things. And here we go. So here's your VIX. Typically going into an election, you get what is the blue. So this is the average of all your moves, pre-election, post-election. This red line is election. So you always get a vol compression, almost always, not every time, but on balance, you get a vol compression, but it usually takes 10 days or so before it hits bottom, rock bottom. And this time was a little bit different. We had a lot more fear. We had a lot more nervousness in all those various asset classes. And we started from a much higher point in the fear sort of gauge world, but it collapsed massively, and you've seen such a massive collapse that it didn't really have that 10 days to sort of play out. It happened immediately, and then so it's kind of sat around 15, and now we're starting to see it kind of start to drip. I call it the drip. And I think in the absence of, and now NVIDIA can throw a little bit of a question mark in there. There's no question. I think it's bigger maybe than people are realizing, because maybe they remember the election, FOMC, this massive move, crypto, Trump, Elon, all this drama and excitement. They'll start to remember that NVIDIA is very, very important for this, for this big theme, this AI theme that really took us for single-handedly took markets up for about a year and a half, didn't they? Before we started to see a little bit of broadening out. So maybe the good news is maybe it isn't as important as it was when it was an extremely concentrated move up in MAG and AI. we've broadened out a little bit. So on the one hand, I think it's still pretty darn important. On the other hand, the market has broadened out, and I don't think it's all about NVIDIA anymore. And so we'll see how that plays out with the VIX over the next week.
So what are you looking at for sector rotation, if anything? Any sectors that you're actually playing? I think semis have a chance. XLE has a chance. I know you've been focused on IWM. I prefer to look at the small cap 600. It's more institutionally traded, but it's also the best of the 2000. So they put the better ones in there and it has a higher performance rating. I just like that one better. But are there any that you're looking at right now, or are you still doing anything with retail or IWM, XLE, some of the laggards? Because all the other key sectors have made all-time highs, right? So we've already seen the run up, honestly, and parabolic moves in many sectors like the IGV, the XLF. But are there any sectors in particular that you're looking at, you're spotting right now for long or short?
I think XLE is starting to look interesting. You're sort of, if you bring up that chart, it's starting to kind of knock on that 95 door. I know you liked kind of the 93-ish, 93.5-ish. Level. Yeah. It can be a heartbreaker though. It is. I find that to be very frustrating to trade. So you want to give yourself time because it can break your heart for a couple of weeks just when you think it's going to go. But I think it does represent interesting value. Quality stocks, huge cash flow, all those things that I like to see, big wide moats, all these wonderful things. So I think that's an interesting place, and it finally is acting a little bit better. Now the skew is pretty darn flat here. I'm not seeing anything too interesting, except that it's low. The implied volatility is quite low. So I think what you could do is you could position yourself in something like one on XLE is trading around 94.5, 95, I think. You could position yourself in maybe some March or April 100 calls. They're probably not going to be super, super expensive at this point. And I continue to believe that this idea that upside isn't too expensive, it's come back a little bit. So what we saw is, and we talked about this, boy, we made a great call on this. These were some big reversions, and you can see right here, upside skew just went bananas to the upside after Trump. It was trading very, very cheap. We're talking about that. When everybody's looking at the left tail, which is the downside, it's time to start looking at the right tail. And that's what happened. And it actually moved up into that big, strong move. So it was a very kind of interesting, I wouldn't say totally abnormal, because I actually talked about it a month ago. I said, this is so cheap to the upside. We could actually see a move up and skew on a jump. And that's what happened. So there were lots of ways to play this, and we picked a few of them in a few different names. So at this point, though, I think the vol's gotten kind of high, and I think you're going to see a lot of supply of vol. So I'm kind of thinking continue to play some of those interesting ideas. Maybe you could, coin pulled back to 281 if you've got the stomach for something like that.
And
upside
by the way,
flies.
both coin and MSTR had a lot of calls that came in that were sold. I wanted to pipe in when you were talking about how call had gotten up, the IV had exploded, right? Became basically a gamma squeeze in the 200 for IV for many, many, many stocks. And they started selling those calls. And of course, this is also kind of helping the softness in the space. But a lot of people don't trade that counter trend, right? So it's all about timing, and someone has to kind of know their own time frame. That's why I define it differently than other people. Chase swing trend. I'm looking at something that's going to be a few days. I'm not a scalper. A few weeks is a swing, a few months is a trend. So it also helps, I think, to put that in perspective as far as when we are talking about these trades, either the month that you're using the strike that manifests that definition of time frame, or just say, I think this is going to take into the end of year kind of thing. So it's just good to kind of put the time frame in. And I know you're talking about McDonald's real quick. That's a big time frame question, right? Because it's got big gaps above and below. When you were talking about the market big picture, take a look. This is still something that has me fascinated, which was we have a typical run up into inauguration and then 100 days of pulling back. So everyone is kind of racing on this euphoria, this honeymoon of buying stocks and or the NVIDIA sentiment. But ultimately, once we kind of get to the inauguration, it's pretty typical, even if it wasn't Trump, that the market would have some softness after that. Just wanted to quickly show
Interesting,
that.
eh? So is that quite different, Samantha, from your typical January to, because seasonally that can be strong from November to kind of March-ish. So this is your
right
outlier,
now we're
right?
in a sweet spot. Right now,
right till March. Keep that in mind. March, April. That's where I'm going to go for the first top. Okay, guys? That's it. Yeah, what's up, Gary? What's up, Duale? No, it's not a good day. If you watched my last stream, I warned about something going to come around the corner, and it finally did. So I think maybe till Monday you might have another dip if they want to play some bad news over the weekend. It's possible, but maybe this was it.
We are in the sweet spot seasonally from November until the first week of January. That is the Santa effect, the 5 days and such. So after the 5 days is the inauguration, is the typical weakness. So it just happens to be even stronger in an election year post-inauguration, typically for 100 days. Again, statistics, you can always, throw them out, but that is something I thought was very interesting when you were talking about seasonality.
Some people might think, well, we've pulled some performance forward. I don't know if that's true. I mean, I think Trump could be, fairly strong. He kind of has carte blanche to do a lot of things, which is a little worrisome as well. He can kind of,
yes,
they're going to be able to do, they're going to be able to do kind of whatever they want. So I don't know if the market is going to price that kind of uncertainty into it, into the fact that it can kind of really, at first they're sort of like, wow, great. He's going to do all these great things for markets and crypto and everybody. We'll see how that plays out a bit.
Now the reality is starting to seep in that he has a massive number of hawks around him, and they are war hawks. So at some point, and I teased this yesterday, but it's really not a tease. It's a real consideration. At some point, we have to start pricing in. The question I had was, when will the market start pricing in war with Iran? Because prior to Trump, not only 30 days prior did I say, this is my election bet, Trump wins, but also I think the one of the trades is not just Bitcoin, not just Tesla, because of those are obvious, and the obvious are very profitable. But I said, what's not obvious is the peace trade. Whether we like it or not, very likely that there will be a forced armistice between Russia and Ukraine, and he will barter that, and the result will be the euro will fall and the dollar will rise. So right now everyone's saying, oh, the dollar loves Trump, right? And his proposed Secretary of Treasury is also writing about it. Oh, the dollar loves Trump. Yeah, well, look at the euro. So the conclusion of a war, which is basically getting priced into the euro, is a currency fall. I don't want to say collapse. So the euro is getting hit, and since it is about 60% of the basket, dollar is also rising. So you have a double whammy there, and yields have been rising. And I want to kind of segue real quick before we get to your McDonald's trade, because a question came up about TLT, and I'm going to share also my chart on this because I have written about this repeatedly. We're not there yet. So example. This was something I had written in regards to this. Santa came early. This was clearly back on the 7th. I have a client post that I put in here, revisiting the Trump trade, which is peace, which is very much focused on euro falling and dollar rising, but specifically about the TLT and when to come in and buy bonds for a trade that yields stop rising and bonds stop falling is basically it in a nutshell. I said, okay, first of all, we have got to get down here. The 10-year T-note futures is still falling, and I still have this level that we have not brought in. So this is a much better place. Actually, let me see where we are right now, like literally today. So this is what I have been waiting for to tag in order to be more comfortable about recommending. There we are. About recommending. So see the yellow? See the yellow? All right, so this is where we are right now. So on the 7th, I said, I don't think bonds are done falling. I don't think yields are done shopping about and rising. Once we get down here, then I think that's going to be a much better place for the 10-year to, and then move higher. I'm talking about the T-note futures, which is also tied to, obviously the retail proxy of TLT. And that's very much focused on yields softening. And my level is, it will come back down to 4.09. That is the level that I was looking for initially when I wrote pre-market for clients September 18th, time for a yield spike. We were at 3.62 base, 3.62. And I said, I expect this to move up into 4.09, 4.1, and then it'll finish up somewhere between, the QRA, which is Yellen's quarterly refunding announcement, and FOMC. And also we got, November 5th in here was the election. So we have had shake and bake of late with the 10-year. We've had shake and bake, obviously, with the red wave. It's intonating a lot. Tax cuts are spending, but less fiscal spending potentially, right? Girl can hope. Neither jobless claims nor Powell indicated economic growth slowdown, which this was written on FOMC day, which was Thursday. And then, of course, the Trump trade would be bullish, except big picture, guess what? I'm not so excited about that anymore because he is surrounding himself with war hawks, bar none. I mean, wow, what a surprise. So all the libertarians, independents, Democrats, and centrist Republicans who voted for him are going,
they're going, what? We didn't think that would happen.
Supposed to stop the war, not escalate it.
Yeah,
And so,
Pete,
these
Hegseth
are
in there.
massive China hawks. These are massive pro-Israel and anti-Iran. This is not about Russia and Ukraine anymore. So bonds are going to have a tough time getting a solid, durable bid for a trade. But that's my level. I'm still 1, 2, 3, 4, 5. I'm still looking for that gap to fill.
Great point, Samantha. That's great. That's a great point. I love how you always kind of think of what's behind door number 3, because that's what's kind of happening, right? This whole sort of, and you're watching what's going on in that cabinet, and that's a very good point. And so I kind of thought the other day, well, we're getting back down into maybe that 430, 425, where we start to kind of relax a little bit. Stocks kind of enjoy that, and that's unraveling a little bit, which is maybe pushing a little bit of money into MAG as a place of safety. I put some clients into some short Apple and Meta because I kind of feel like those are a little bit places to hide a little bit. This kind of big bank account type companies that are doing things right. So I've
not
been
Amazon
kind of
that has finally made it through the Jeff Bezos 200.
Amazon. No, I called it and I got out around 209. So now I'm a little frustrated, but you can't grab every dollar. So I love it. I've loved it since, we've had the structures on and done well in that. And I think it does continue to go higher. So I'm thinking maybe doing a financed play, selling. I have to take a look at the skew, maybe selling some 195s, playing more of that upside that, especially into Black Friday and the whole, but I think typically it comes off a little bit after that event.
It does. I was just going to say it will retest 200.
Right.
So,
okay.
I mean, but absolutely the combo deal of Trump plus animal spirits in general, right? And just the call wall of 200, which was where he sold, 1.2 billion. And we had to absorb that supply. Long story short, now we're above it. You do not short all-time highs. I understand that you're talking about putting on structured long product with options, but we are extended. The mean is 195 and it's printing, it hit 215 today. So it is $20 extended. I would much rather buy it at its mean than $20. Yes, Friday comes in, it looks still very bullish. So anyway.
I like that idea though. Amazon is that stock, having watched it for so long, it always gives back 10 or 15 bucks after it sort of makes a significant high. So it just is that stock. Remember, it didn't move forever between 180 and 190, and it finally went because it kept failing by 10 or 15 bucks. So, and I'm looking at a few things here just because the market's so extended. I'm looking at, I find that sometimes people want to focus on shorting strength, which to your point just now, why do you want to short things that are acting fantastic? You want to be very measured in the way that you short things. So I'd be looking at more things like McDonald's, like Nike, like, I don't know if Starbucks it has moved towards 100 again. And I wouldn't be shorting Disney anymore. It's starting to look a little interesting. Something like a McDonald's where there's this overhang of news, and it's just too darn expensive to go there anymore. So you look at something like McDonald's, you've got this put wall down around 280. So what I would, the way I would kind of go through this, I'd say, look, you've got this put wall. I think the 300 call wall has really been holding very well. I talked about that weeks ago, and it's really been hanging in there and repelling the stock. It even got it over 302 the other day again, and it failed. So, I'd be kind of looking maybe for continuation, follow through down towards this 200-day moving average. I like this level here, a couple of spots here where it broke out, a couple little touches here that lead me to believe that this could be a level. Now, the volatility is fairly inexpensive right now. So what I would be,
I like that.
Yeah, it's inexpensive. So I would almost be willing to just buy. It's quite, the skew's flat. So you're not paying up a super high amount in terms of expensive puts, meaning when we talk about skews, that means are out of the money puts expensive. Well, they're not that expensive. And so they're not really pricing in that downside. So to me, that's interesting. That means maybe we have that that move. As soon as put skew gets really, really steep, that's a sign that maybe too many people are going, okay, I'm bearish, or it depends what the product is. And that might be your sign that it's exhausted.
Yeah, I really like this one short. I like this one short for three reasons.
Good.
Yeah, I am first of all amazed that after it's only a 5% pullback on the E. coli that caused deaths, small amount of for a very large company relative. It was a knee-jerk reaction. I get that, but it left behind a gap down at 279.50. You kind of show it with a red arrow, which is also the 200-day. That to me is so in other words, there's a reason for it. Number one, for that gap down. Two, and Chipotle for a long, long time, it was kind of untouchable, right? So it wasn't that buyers just didn't want to step in. They may not have stepped out, but a little bit of gravity took hold, right? So this is what I'm looking for. Second is that gap fill. It's not a question of if. It will fill. It will fill. So that's the second thing from just a technical standpoint. I have seen this way, way, way too many times. You do need to add a little bit of time. Also, this is going to be in the target hit. I don't want to call it the hit squad here for the little bit of time. Also, this is going to be in the target hit. I don't want to call it the hit squad here for the Bobby Kennedy's kind of assault on fast food and ag, industrialization of ag and big pharma. And there is no way I have any interest in trading XLP, XLV, and a lot of the components therein long. That's my shopping for short.
Actually, XLV today, after RFK got confirmed in the health department, it crashed pretty bad. So XLV healthcare, not good. And I'll start talking about some stocks that I mentioned before, psychedelics. I mentioned psychedelic stocks. They did quite well today, so I'll go over those.
And it's absolutely going to be under pressure, especially into the new year, if he is given any authority whatsoever. So I would say McDonald's is a great short. I would agree with that. Even though by the way, even though it is a fabulous company. I mean, this is this had been a trend long. So it's not that I'm beating up on McDonald's. I'm just saying for a swing short, I think it's a really good structure. But keep in mind that this is a REIT. This is not just a consumer food company. And then we measure strength of the consumer or food tastes or anything like that. This is a massive global real estate investment trust. So this is extremely hard to roll over. I'm just talking about a short into 279.50. That's it.
Right. Don't marry this trade. Just kind of get in, get
exactly.
out. Yeah, exactly. Just date it. We're going to date that trade. And I think it's reasonable, right? And I think and with that call wall, I think you don't have to get too shaken out. I mean, if it gets above 305 towards 310, then maybe you start to have some doubts. But at the moment, it's really, really struggling. So that's the kind of short I like to put on right now. And then I would continue sort of playing some of these interesting plays. I don't know if you kind of like Mara in here at this level, maybe coin. These are high octane though. So
yeah. So for me, it's all about, we already talked about this mid-October. So Bitcoin was going to rally. It was part of my thesis. Also, semis would follow. So I have this sector rotation thing. And for right now, Bitcoin rallied. Now it's going to take a little pause because we're parabola traders. And by the way, when I said it would come back down to 2150, can I just show my chart real quick on Mara? This is a tricky one, right? And my God, everybody knows that Bitcoin is not my wheelhouse, nor do I find it in any way, shape, or form real. But it is very tradable. And this is what I meant by we were looking at this before with Bitcoin, with MSTR, with Coin, Hood, and then, of course, Mara, because it's the largest miner. It has the most Bitcoin on the balance sheet. We were already in PayPal. We were already positioning for Square. So these are also plays that have Bitcoin on the balance sheet. This is a theme. This is just a theme. And that's what I chase, is where is the money flowing next for volatility? What does the options market look like for positioning? So this was October 17th, not November 13th. So this is a month ago, kind of hanging out, waiting for something to happen. And then, of course, it popped above, really kind of sat here nicely, moved 25% in a day. So that's the kind of thing that we were ready for. Now, earnings come in, And I've already mentioned this. Coin earnings sucked. Riot earnings sucked. Mara came out, blah. It's coming back down. And this is why I said be careful. It can come all the way back down to that 8-day, which is about 2150. But big picture, you still have Bitcoin in a raging inferno of a parabola. And this can be volatile, just like the proxies. So that's why using options is beautiful, because you can define your risk.
And you can really
So-
identify where you're like, so I put out a note today just talking about, I understand what option Greek is really in control, is in the lead. We talked about NVIDIA being in the lead in semiconductors. Well, what Greek is in control? So when volatility was high, Vega was in control. That's where you made your money. When volatility is low, theta is going to sort of be your torque. And so you have to understand, where are you focused on? So with options, it doesn't really matter if volatility is high, low, medium. We can find a structure, and that's what we help clients. And
So this is where the options comes in, you know. You are not trying to bet just on like price going up or down. Now you're betting on time, how it moves up and down, the volatility, all kinds of things. You can structure things so complex. This is where it's very multidimensional. And most people would use options like insurance, like that's one way, but it's also, you can do options as a way to build a trade where there's certain price levels around certain areas, and you could use that to decide, okay, I'm going to say my loss will be this much, my gain will be this much. It'll be very precise. And that's where the beauty of options comes in if you do it really well. But, it's not for everyone. It's very complex for a beginner. Like the learning curve is really high, right, to go to that level. So many people don't want to go that way. But, I'm just telling you, if you got the time, patience, maybe, you could be a lot more advanced than I am at this point.
members with at Leduc is really help them to understand, well, what is the best structure for a particular outlook on things? Because there are probably a couple good ones, but there's probably a better one for it. And so that's kind of because options trade in many multiples of dimensions, we have to understand that aspect of it.
And also time frame. So one thing I just wanted to mention, yes, because I know we get into the analysis side of stuff, and that's what I really, really love, right? So big picture pulling out here. I should say this at the very beginning, and I forget sometimes that folks.
This slide's pretty interesting. I mean, you got the whole fast food complex. Now, I don't know why they didn't put in, Chinese fast food. YUMC, YUMC. I talked about that. I feel like Chinese fast food is going to do a lot better than American fast food. So if you care about Pizza Hut and KFC in China, it might be a lot better than Pizza Hut and KFC in America.
Folks are maybe new here, and because I'm so used to doing a live trading room every day for clients and then engaging with 10 contributors. So because I run this finance, I consider it honestly a research firm, but we have 10 pro traders and analysts, Hans obviously in teaching options as well. So those are the collaboration skills that we're bringing to support the clients. But for clients those watching who do not have maybe an option familiarity, Hans has a fabulous course, and it's actually up on our website. So leductrading.com/Hans, you'll see it there. So he provides also kind of structured options education for beginner, intermediate, and advanced. Very much like I structure my products, Chase, Club, and Edge, which is very much beginner, intermediate, advanced. And so if you come into the Leduc Trading ecosystem, you get access not just to Hans and myself, but you have a complete trading desk of 10 subject matter experts. So this is something that we do publicly. It's always fun to kind of collaborate and then test, okay, you see the market this way and why, and what are you trading? What about this idea? What's your skew view? Because you have your tools of studying realized and implied volatility that might be different from my more kind of focus on the flow and technical analysis. And then I'm basically a little bit more, let's just say, uneducated on the advanced options and very much focused on buying a directional bet. So I place much more focus on a directional bet where you have the ability to really say an income strategy. I can do a butterfly and just pin, so you focus on the entire ecosystem of options, hedges on portfolios, not just directional. I'm very much focused on directional and then using advanced option tactics when necessary, like a bull risk reversal for Tesla or that financed call spread for NVIDIA. But I'm very much focused on a directional play. So I just want to kind of, that's where I'm a little bit more focused and limited. You do it all.
Well, but I'll tell you what, you're too kind, Samantha. You can do it all too, but I'll tell you what, it all starts with the stock. And so this is everything. These are derivatives. They derive their price from an underlying price, which derives its value, at least we hope, to from the underlying business at some point. And so it really, what I tell people, the students, is all roads lead back to the stock. So be careful. Don't trade options because you see there's a little edge here. There's make sure that you understand that you're still trading the underlying stock. So I love that view that you really start with that foundation of what's the stock going to do, and then you build upon that. If you see
I go back. I want to know what the market's going to do. Then I look at the sector rotation, and then I look for the strongest stock. I don't even like to trade low priced stocks using options. I don't ever do penny stocks. I mean, like I'm always going to look for a very liquid, very, not just a liquid stock, but also an options market that's very, very liquid. So I'm still going to be really, really focused on the best of breed plays. Otherwise, it is going to be using stock because it doesn't have a good options market. I don't want to make a market. So, but yeah, I do try to use the backdrop and then come in, find that stock, and then say, Hans, what do you think? And I think a lot of clients do the same thing.
I like what you said there about sector rotation. I think that's one step that a lot of people miss, is that you could get excited about something in consumer discretionary, but make sure the stars are aligning for you and that particular sector is doing well. It doesn't mean that your one stock can't be an outlier, but it's always nice when you have more bits of edge and tailwind behind you if your sector happens to be acting well. And so that's what we're talking about here, is really kind of layering that edge. What's the short term? What's the medium term? What's the long-term outlook on the stock? What's going on in the sectors? Is there a rotation going on? How do we express our view in options? Is there skew? Where's the volatility level? So it's really putting all those things together and looking for something that really kind of takes advantage of things. And the coin space was exactly one of those. When I put on the original MSTR trade, everything was screaming to do certain thing. Here's your list here. Here's your McDonald's. So I thought this was kind of cool. I can't remember where I got this from, but same store declines in sales right across the spectrum of fast food, which I thought was really interesting. They have not done that well in the space, except for my little favorite one here, which is Shake Shack, the chart's been going bananas lately. But look at the sales here. So this is Robert Kennedy is going to be happy about this, that there's already some weakness in here, but I agree with you. He could make this chart look even worse. So be careful, unless it's Shake Shack. I don't know what's going on. I think they're in expansion mode. They have room to throw up 500 new stores. We'll see if that continues, but I think that's a very interesting space to watch.
Yeah, I think it's a good space. And I want to just share this real quick and then we'll end. I think unless there's anything else you want to cover. This is and has been fabulous for safety defensives kind of source of funds into XLP, which is consumer staples. We had a really nice advance and then it started to roll over very firmly. And this is, again, I'm on a weekly, but I can tell on a daily too. Same thing. I had an absolute guaranteed we're going to go fill that 79.71, right? So when we started rolling over, I'm like, we are going here. But the point is, I think this will be in more distribution.
Sorry, guys. Looks like it crapped out again. Let's see. 50. All right. Let me represent it.
Introducing
back to the stock. So be careful. Don't trade options because you see there's a little edge here. Make sure that you understand that you're still trading the underlying stock. So I love that view that you really start with that foundation of what's the stock going to do, and then you build upon that. If you see
Well,
a stock,
I go back. I want to know what the market's going to do. Then I look at the sector rotation, and then I look for the strongest stock. I don't even like to trade low priced stocks using options. I don't ever do penny stocks. I mean, like I'm always going to look for a very liquid, very, not just a liquid stock, but also an options market that's very liquid. So I'm still going to be really focused on the best of breed plays. Otherwise, it is going to be using stock because it doesn't have a good options market. I don't want to make a market. So, but yeah, I do try to use the backdrop and then come in, find that stock, and then say, Hans, what do you think? And I think a lot of clients do the same thing.
I like what you said there about sector rotation. I think that's one step that a lot of people miss, is that you could get excited about something in consumer discretionary, but make sure the stars are aligning for you and that particular sector is doing well. It doesn't mean that your one stock can't be an outlier, but it's always nice when you have more bits of edge and tailwind behind you if your sector happens to be acting well. And that's what we're talking about here, is really kind of layering that edge. What's the short term? What's the medium term? What's the long-term outlook on the stock? What's going on in the sectors? Is there a rotation going on? How do we express our view in options? Is there skew? Where's the volatility level? So it's really putting all those things together and looking for something that really kind of takes advantage of things. And the coin space was exactly one of those. When I put on the original MSTR trade, everything was screaming to do certain thing. Here's your list here. Here's your McDonald's. So I thought this was kind of cool. I can't remember where I got this from, but same store declines in sales right across the spectrum of fast food, which I thought was really interesting. They have not done that well in the space, except for my little favorite one here, which is Shake Shack, the chart's been going bananas lately. But look at the sales here. So this is Robert Kennedy is going to be happy about this, that there's already some weakness in here. But I agree with you. He could make this chart look even worse. So be careful, unless it's Shake Shack. I don't know what's going on. I think they're in expansion mode. They have room to throw up 500 new stores. We'll see if that continues. But I think that's a very interesting space to watch.
Yeah, I think it's a good space. And I want to just share this real quick and then we'll end. I think unless there's anything else you want to cover. This is and has been fabulous for safety, defensives, kind of source of funds into XLP, which is consumer staples. We had a really nice advance and then it started to roll over very firmly. And this is, again, I'm on a weekly, but I can tell on a daily too. Same thing. I had an absolute guaranteed we're going to go fill that 79.71, right? So when we started rolling over, I'm like, we are going here. But the point is, I think this will be in more distribution moving forward. And unfortunately, I think we're going to have biopharma, which has been a holdout for a lot of hedge funds, are going to be absolutely hit. This was one that was recommended by Alexander early. And oh my goodness, this is Merck. He did a detailed report on this. And this has been a phenomenal short. And this thing is not done. But I don't like any of the drug manufacturers, period. And this is what I mean by there are shorts here in XLV, XLP. But I think we have some more washing up to do in some of these strong defensive sectors that right now are going to be under attack, for lack of a better word. And I think they'll go find the money will flow elsewhere. Let's just put it that way.
That's where you can really, you can take a view, Samantha, and you can say, well, look, I'm not going to get bearish on Pfizer, for example. It had taken a bit of a hit in that. But what you can do is you can have that inform you as to maybe a little short. So we have maybe Pfizer rallies, or one of these stocks, Merck rallies to a 9-day or an 8-day, whatever level you like. And that's your chance to maybe sell out a little bit of volatility, sell out some calls, maybe an iron condor or something like that. So you can definitely play these weak themes. That's the great thing about options, is you can play whatever the prevailing wind happens to be. And that might be a place where you can offset some of your long exposure with a little bit of negativity towards those areas. And that's a nice offset.
Well, I appreciate very much everyone coming out for Options Out Power Hour.
All right. So I think that gives you a good overview. They were talking about defensive stocks being good shorts. One defensive sector that's still good is utilities. Okay, so utilities. We can discuss that after watching this. I think it's a quick video here about uranium. So some little news about uranium today.
Big right now on some fresh headlines. Our Pippa Stevens is tracking that. Morning, Pippa.
Good morning, Carl. Well, uranium stocks are getting a boost as Russia is reportedly imposing temporary restrictions on the export of enriched uranium to the U.S. According to Reuters, it's in response to the U.S. imposing its own ban on imports of Russian uranium last spring. Now, part of that was thanks to a growing worry in Washington that Russia would weaponize uranium. Now, it's a major player controlling roughly 40% of the global uranium enrichment market and supplying about 14% of U.S. uranium. Mark Nelson from Radiant Energy telling me this alone will not turn the lights off in the U.S., but it's yet another wake-up call to utilities in America that we need nuclear fuel independence as soon as possible. Now, Arthur Hyde from Segra Capital, which invests in nuclear stocks, added this would have very serious implications for the nuclear fuel cycle in the U.S. and that we could see a rush to secure material in what is a traditionally quiet part of the year, adding that this highlights the need to develop Western fuel capacity for national security purposes. The URA and URNM, which track the space, both jumping.
Okay, yeah, but I mean, towards the close, a lot of that stuff went faded. It got faded. That pump didn't last, so I'll keep watching, and we'll go over some charts of some stocks that we've been looking at. Now, here's another thing to talk about today. Let's see. Went over that. Oh yeah, retail numbers came out. I'm not sure if that caused issues in the market, but it might have been one part of it.
This morning, talk about the state of retail. TD Cowen Managing Director and retail analyst John Kernan. John, thoughts about the macro print? And then, I mean, lately I've seen so many custom baskets of retailers with high China tariff exposure. How important are those to pay attention to?
Yeah, thanks, Carl. It's great to be on. We're actually pretty bullish on the consumer. There was a bit of a slow start to November from a traffic perspective. That's to be expected given all the headlines around the election last week. But we think both the high-end and low-income consumer will do quite well as we get into holiday and just beyond holiday into fiscal 25. We think animal spirits can rise in our view. The last time President Trump was in office, we did see a very healthy bounce in retail sales trend line, and consumer confidence broke out to a decade high. So you combine that with lower inflation and lower interest rates, we think it's a good setup for the consumer.
Right. Weather's turning. That I imagine that helps a bit. And then are you looking for retailers that have high density exposure to calendar Q4?
Yes, they all do to calendar Q4. It's critical for all of them. TJX, we do think, stands out as a winner, just given the quality of their inventory buying recently, the value equation they provide to the consumer, and just really the strong earnings flow through they've had on these, 3 to 4% same store sales growth that we think they can continue to generate into holiday, but also into next year.
How else do you distinguish between retail winners and losers right now, John? Because it does still feel like this bifurcated consumer where it just depends on what category you're in and whether the brand is speaking well to its base.
Sure, it's tremendously bifurcated. If you look at just stock performance year to date, there's tremendous amounts of companies at all-time highs in stock prices, all-time highs in valuations, and you have the other bucket that's at the complete opposite end of the spectrum. TJX is one that's executed. I think you can put TJX in a bucket with the other titans of retail like Walmart and Costco, both of which are near all-time highs in valuation multiples and market caps. Those are covered by my colleague Albert Chen. But the mix of business there is different, but earnings growth and return on invested capital and competitive advantage is very similar for TJX and those as well. And we think TJX is not expensive on a relative basis. In the mid-cap space, we've preferred On and Deckers. Both of those stocks are right near all-time highs. They're stealing market share from Nike and others, and they're generating some of the best margin structures that we've seen in footwear really ever. And we think that continues into next year. I think the winners keep winning in holiday and into next year. As Carl said earlier, tariffs are a concern. They're a concern for everybody across the space. Whether it's a blanket import tariff or China tariffs were to go to 60%, that would be quite disruptive for some. TJX, I think most of their vendors would probably eat most of that tariff. TJX has that type of power over their vendors in terms of buying power. And I think when you look at tariffs, it's not just a potential 60% tariff. What is Beijing going to do in response to a 60% tariff to all those multinational American companies operating in China? And that's probably a bigger issue.
Hey, finally, John, on electronics, Street's been trying to get their arms around just how powerful the refresh cycle will be in PCs and phones. Where do they stack on your list of favorites?
That's not my cup of tea or category that I focus on. We're mostly on the soft line side of things. But again, we're pretty bullish on the consumer. The winners in consumer, like Sarah said, it's a very bifurcated market. TJX is going to be one of those winners. On Deckers, Dick's Sporting Goods. These are going to be the holiday winners, certainly in soft lines retail.
And Dick's Sporting Goods. That was a fun stock to play over COVID. Yeah, let me show you a chart of that thing. Crazy. That was a crazy stock. Yeah, we'll see how retail does over Christmas. That's going to be a big deal. See, Bitcoin now at 91,300. All right, let's see how it does over the weekend. Yeah, it's mostly a sideways sector, retail. XRT, you can look up the ETF. Yeah, kind of similar to how, small caps went. Now, let me see. Let's draw some line here. Yeah, see? Kind of made that high in April 2024. Yeah. Okay. And made a local high in November 2001. So yes, it is quite similar to small cap. So I can put IWM here, and compare the two. You see, they're pretty similar, aren't they? Right? Yeah. See that? But small caps has really rallied. This is the key. I gotta see those small caps really going up. So it better not fade on me, because I don't want to see this thing again. When you see this thing again, you see this move here. Small caps did the same thing. That was your tell. That was your tell to get the F out of the markets in 2022. Because once New Year's hit, people took their taxes. They were like, oh, I'll take my profits the first trading day of 2022 and get out. And that was it. Non-stop selling. So the first day of trading was Monday, the 3rd. And then after that, it was just down, 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 down. And you all saw this right in November. I mean, that was the Omicron. That was when Jerome Powell said, no, inflation is not transitory. I made a mistake. I'm going to raise interest rates. That was it. That was your time to get out. So we kind of get this little, I don't know if this is going to be a blow off, because what I see in XBI, biotech, I don't like that. I don't like this. You try to break out, and then the whole week you're going down, which wasn't a surprise, because this is options expiration week. Every month, every third Friday of the month, there's option expiration, and it's even worse when it's the third month, okay? So every quarter, you have the third Friday of the third month. So next month will be the third month, December. So the third Friday of December, which will be, let's see, the 20th. So just before Christmas, just before the Grinch, we don't know what's going to happen. Yeah, there's always some shenanigans. This could be shenanigans. This could be a fake out. This could be something to trap a bunch of people thinking like, oh, we're going to crash again with biotech. I don't know. But I don't like seeing that. Okay. Because you need the trash sectors to pump. That's when I know the bubble's ready to bubble. We're not at that condition yet. So when you look at ARK, okay, ARK, right here, this is ARK, Kathy Wood's baby, full of trash stocks that make no profit probably. They only run on growth. So if they can grow the revenue, the stocks move up. And the only time people are willing to bet on those type of stocks are in certain conditions. You got to have high liquidity. You got to have a bond market that's not going very hawkish, right? We don't want bond yields to go back to 5%, whatever. We don't want that. Other things we don't want. Blah, 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 blah. Well, a lot of fiscal stimulus would be good. You can allow mergers and acquisitions. They're also very good. They pump stocks very nicely as well. You got stocks that will, buy each other out, and they'll temporarily pump up certain stocks. Might be a rude awakening, but we shall see. Well, okay. His point. So my projection for a recession is still in 2026. There's two reasons. One reason is the yield curve. Second reason is the real estate cycle of 18.6 years will not hit until 2026. Okay, there's two reasons for that. That I think it will not hit yet. So, and also we have midterm elections. So if the Democrats come back, take over the Congress, then obviously party's over. So as long as party's on, we're going to have plenty of money injected into the stock market for at least 2 years. The first of those years probably will be the most explosive of them, which will be in Bitcoin. The second half will be in oil, natural gas, commodities. Okay? So first half is trash. That will pump first. Then we move over into commodities. That will be the final end, because the commodities bull run is usually the end of the cycle. Okay? First bonds go up, then stocks go up, then commodities go up. So I put up that chart way back when I was doing these streams. That's how all cycles always go. Bonds move up, stocks move up, equities, and then commodities move up last. So you'll see oil, natural gas, gold, silver really blow up really nicely. And that will be the end. That's when you know it's the end. It's the end. The fat lady sings. You're going bye-bye, selling out. That's the last. And then you wait for the crash. I don't know what's going to happen, but I think, Trump is, the banking sector will be, this is tedious. Hey, I'm not going to do that. I'm not I can't do that legally. Sorry. You're going to have to learn yourself. This is why making money can be easy if you've done this so many times before. This is second nature. This should be second nature, Like, man, they don't teach this in school. This should be taught in school. Like, it's fucking easy, bro. Like, you see this with Apple, Microsoft, Google. These are the leaders here, the Mag 7. So these are 7 top stocks. You can see the cycles pretty much line up right now. We're going back to the top of here. I think we're going to go sideways and then, move on from there. That's where the big bucks are going to be. So I'm hoping that this is the end for the Mag 7 into next quarter. But I don't know. NVIDIA, I'm waiting for NVIDIA. So if you invested or you traded, I'm just trading right now. Let's see. Blah, 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 blah. I don't want this. You gotta do this on your own. It's not legal to do this. Yeah, I have to get a license to tell people what to do. That restricts my opinions too, because you want to keep people safe. You want to take risks. So this is NVIDIA, right? Yeah, there you go. Right here. Now, right at the top of June, we've hit that top. Oh, man. And we got earnings on Wednesday. So you got 2 ways to play this. I got SOXL. We got SOXL right at the bottom. We hit right back here. Okay, I'll play it again. I'll play SOXL again at $26. So I bought some. I'll wait for Monday. Okay. Now, if you guys want to play NVIDIA, I got another ETF for you. You don't have options? You don't know how to do options? Hey, you can buy NVDL. NVDL is 2x NVIDIA. All right, ETF. I don't know if it's a buy or hold type of stock. I wouldn't say it is, but if you just played your game here when the ETF just opened up, you're like, oh, I'll just buy this thing in December 22. So for some reason, This ETF was introduced right at the bottom of Nvidia. So you could have bought it at $3, I guess, at the very low. And if you sold at the top, that was 90. Not bad, not bad. This is some shit right there. But I wouldn't have done that. But hey, that's pretty. What a coincidence that was. I don't know. You introduce an ETF right at the bottom of the. How many times does that happen? And this is the dumb ETFs, okay? For the people that don't know options, there's a lot of these things now. So this is called Granite Shares 2x long Nvidia. Oh yeah, baby. But are we ready for another move up? Is this the move up? Now, this thing was more obvious when it took a break here. So Nvidia took a break around, what is it? Let me draw the rectangle so you guys can see. Oh man, come on. Give me that rectangle. Okay. January 24, 2024. Okay, so May 2023 to January 2024. Okay. So that was that time when it took a break. Now it's been taking a break from summer and probably till January, perhaps. I don't know. Maybe it'll break out after the earnings. I'm not sure with the Santa rally. This is going to be important. So yeah, Andre, no, this ETF is 2x Nvidia. Okay, so this move to daily. I don't want to get into this right now. So this is Nvidia times 2. So this is 2,600% if you bought it at the low and compare that to Nvidia. It's not going to be exactly 2x of the percentage. So let's say go back to here. What is it? Around December. Okay, let's say it's around here. See, 1,000, about 1,000%. Okay, 1,000%. So if I go back to NVDL, you see you got 2,600%. See? Has Trump picked a treasurer? I think there's rumors he picked someone already. I mean, they always have rumors. They always leak all the names before I don't know if they're all confirmed. I mean, everybody's been saying all kinds of random stuff at this point. Might be nothing. But no, I don't think there's anything confirmed. But RFK is a big deal. Oh, yeah, I got to talk about RFK. I heard you say, I was just wondering why you compared the two. Yeah, so the NVDL, yeah, is 2x Nvidia. Okay, that's daily. So they have these single stock ETFs now. Now, let's say you do XBI, right? I talked about XBI, the ETF. Now there's a 3x version of this. It's called LABU. I am thinking of buying it. I think I bought a little bit just to test the waters here. Because if I think this was a false move, if I think this was fake, this is not real. This is not a real breakdown. Even though from a technical point of view, if I looked at this as a chart, I would say like, dude, that's a breakdown. But I know this is option expiration week. I know some of these moves are probably phony because they want to clear out a bunch of calls. Hey, I'll give it a chance. I'll buy some here and I'll buy some again on Monday and hold that. Because if I think haven't heard. Yeah, it got popular. It got really popular. There's one for Meta. There's one for Google. There's one for Apple. There's one for Tesla. Oh, there's a Tesla one. Here's a Tesla one. Let me see. TSLL. TSLL is 2x a Tesla. So yeah, you can. So people that don't that don't know how to use options, because most people, if they want to leverage, they either do margins, right? They get a margin account, borrow money to buy more Tesla shares that with money they don't have, or you use these options, right? You try to construct a trade where you go like, all right, either use leaps, that will probably be safer, but if you're not using that, then you got to figure about calls and puts, what puts to sell and what calls to buy to sort out what's the best construction to make a leverage play here. But then you have to understand about gamma, delta, freaking all this Greek stuff. Most people are too lazy. So if you're late, also, oh yeah, another reason why is because some people can't be opening options accounts right on their 401ks or something. They just want to use an ETF and they're allowed to buy TSLL. Yeah, they'll do that. They'll just do this cheapo way. That's another reason. Yeah, so that's why yeah, it's done, man. It's done. So anyway, here we are right here. No surprise. This shouldn't have been a surprise. I warned what was going to happen this week. And I said, Monday they had some bad news about semiconductors. Didn't do much to the market. So this is a NASDAQ, right? QQQ. Next few days, nothing new. CPI, nothing. PPI, nothing. And then all of a sudden, Friday, for the expiration, pop. We drop. Well, there you go. That's it. You think biotech ascended through the roof can actually ruin? Are you a fan? Telehealth. Okay. So get a point of view. That's a good question. I'm gonna bring up that stuff later. What's up, San Jose? Yeah, because I was going to talk about psychedelics. This is my favorite sector. And I've been mainly promoting MindMed because it has the FDA approval. But today it had the pump on the RFK news and then it just faded it all, right? Okay. But overall, the chart is more attractive from a long-term point of view. Yeah, MindMed. This is my favorite stock, man, because you could get in at 2, you got at 12, sold at 12, get back at 5, sold it again at 9. And now I'm waiting to see what it does here. Perfect. So it faded it. It got pumped, it got dumped. Okay. So you got that news, you got options, you got people playing around. So most of this move will have to be shaken out into Monday. I got to see what it's going to do, because if it does what I need to do, I'm getting back in at 7-ish on MNMD MindMed. But what's really interesting about the RFK news is finally the trashier ones. Cybin, CYBN, Atai, ATAI, Atai Life Sciences, and Compass Pathways, CMPS. All of them do psychedelics, but their charts are way worse. You can look at it right away, right? They're just trash, utter trash. They're just at the bottoms. They're just hanging out the bottoms. But Atai was the best performer of all of them today. Wonder why. Maybe because Atai, ATAI, has some connection with Peter Thiel. Peter Thiel, buddy with a lot of people in Trump's circle, right? And that's why I like Palantir. Bingo, Palantir, my favorite stock of all time. One of my favorite, no, not all time. Apple's probably my favorite stock of all time. Tesla, probably my favorite. AMD, maybe, kind of depends. Maybe not. Nvidia kind of outshined AMD. Maybe AMD is no longer one of my top picks. But yeah, Palantir, yes. PLTR, one of the first stocks and only stocks I keep recommending as a long-term, not just a trade, a long-term buy. The other one is Axon, as you know, body cams. A lot of you guys like to watch body cams videos. Why don't you just buy body cam stocks and support them? So yeah, I don't know too much about Cybin. I don't follow Cybin too much, so yeah. I don't know. I'll have to look into it. Get a point of view. Yeah, I don't know. I don't really look at the fundamentals or the news too much. I just look at the charts and see, like, hey, why is this thing acting differently than the other guys in the same sector? Is something up? Does something smell? Is the rock cooking something? So that's kind of how it goes. Like, you just look at charts. The charts will tell you what the fundamentals are, because most people, have to buy and sell shares, and it can't be hidden from the actual chart. The only way that the charts will not reflect the fundamentals is because either so many people got fooled, and that's possible if a stock is very small, it's not followed very well, but it tends to be that if a stock has a lot of liquidity, it's followed broadly by many people, participants, that shouldn't happen. So that's kind of why you see things like this on penny stocks where you can't trust it. Like here, Qubit. So the night before, actually, before this happened, I was talking about these quantum computing stocks. They're penny stocks. And that morning, Qubit had a PR talking about they had a customer and it shot up like 100%. And the reason why is because this stock has no liquidity. Like if you look at the volume for most of the week, it's barely like 10,000, 3,000, 4,000 4 million, my bad, millions, 3 million in a week. But this week, because of that news, this number of shares that traded between each other was 400 million at this point. So that's why, yeah, you don't want to play around with penny stocks. Things, you can trade them, you can gamble with them, but I don't know. So Qubit, QBTS, yeah, these are truly penny stocks. QBTS still hasn't broken out here, so QBTS still undecided. IONQ is probably the only quantum computing stock that has good volume. Probably can say like it's still a penny stock-ish because it was a SPAC. It still acts like a SPAC IPO, even though it's a lot better than the other two. I don't know. I'll keep watch. I'll keep watch on it. Definitely. But since you got some of you guys like to do day trading, I just mentioned it because you see, I'm just trying to teach you that all the stuff I tell you about reading charts, it's fractal. Okay? Like you can take all the stuff you learn here, you can apply it to investing, you can apply it to day trading. It shouldn't matter. So that's the beauty of it. Where if you come up with a method that works on different time frames, it can scale up and down to your preference, that means you know that the thing you're using is very solid. Yeah. Oh, the other ones were the space stocks, Lunar. Yeah, they had the earnings. Let me see. So it faded the earnings, but today it recovered. Very good. So LUNR. Company name is Intuitive Machines. Okay. So that one we gotta look at. Rocket Lab, also my favorite. It had earnings several days ago. It's still above that 14.6 area. Also good. ASTS had earnings today. Bad. It lost, and it was down like 15% at the worst case. But at least it's still trying to fight. It's still trying to hold this area near $25. So maybe it has a chance. Okay, so a lot of these stocks, they have very good potential when the liquidity keeps boosting. I know it's already gone up quite a bit, right? A lot of these things, but they have been making huge bases for a long time. So let's look at we'll put this back on weekly. Let's look at the monthlies on this one. See, this been since 2021 when it first started, and now the bubble's back. So if the market is very juiced up and it just broke out of this long base where it was building from 2022 to 2024, it started trading in 2021, and 2021 was the last time we had, and many of these stocks are the same thing. Many of them are SPACs. They have the same history. They traded as a SPAC and started doing work in 2021. This is how it is. Not MindMed. MindMed already was. What's another one? TMC was was it? It kind of looks like a SPAC the way it's trading. Yeah, it is. It started at $10. So that's the way you tell what a SPAC is. A SPAC. Here, let me define what a SPAC is. The acronym. You guys should know that. SPAC. Okay. AI should tell me what it is. AI always has a good summary. A SPAC IPO, SPAC IPO, is an initial public offering by a special purpose acquisition company, SPAC, to raise capital for acquiring another company. All right. A SPAC is a shell company that goes public without any business operations or acquisition targets. The SPAC sells shares at a discount to raise capital and then merges or acquires a private company within a specified time frame. The private company becomes a public company without having to go through its own IPO. So this is a cheap, broke way of doing things, and you don't need to go through private equity and get all that initial funding, like Palantir, right? Palantir did it that way. And you look at Palantir stock. So usually this is what IPOs do. IPOs, this is what happened. You IPO, you pump, all the insiders can get out because through this time there's lockup period. That's what they call lockup period. The insiders that bought before it became an IPO have a certain time where they say they have to hold it. And then after that expires, they immediately start selling it. And it didn't help that right after we had the interest rate rise from Jerome Powell, everything came back. And this is where I told people to buy it, because at that point, this chart, we were below the IPO price. I said, like, why the hell not? Just buy it. Because at a certain point, Jerome Powell will have to stop raising interest rates, right? So at that, the market will start going back up. So this is when the market recovered. It wasn't because Palantir recovered. It was because the market started recovering, all right, at that time. And that's when now we're hitting here at new all-time highs. So that's how you do it if you're doing it at the long term. Now, I could take this chart and look at the short term, right, and then try trade it. I can go to daily or something like that and see like, oh, it's a rising thing, blah, blah, blah. You can do whatever you want. But for me, I recommend most people is just, you got to get your capital from your job. Try to build your capital that way. Then you can start thinking about long-term investing and things like that. But I know a lot of people, it's really hard to build capital. So, and with inflation as it is, I think, yes, some of you might be able to trade. It's not easy, though. Not everyone is cut out for it. But if you are, these tools will work just the same way. So trading, talk about trading. Let's look at GameStop. Man, this morning, it almost tried to get out. But, the market as it is, we have options expirations. It had to pull back. So we closed right on here, $26 about. We're close to $26, $26.59. We got to get above 28, guys. We got to get above that. That's the only way this thing will start humming real nice. So I'm still waiting for that. Another stock to look at, Affirm, very good. I think it did a really good breakout here. Very good breakout. So AFRM, we'll talk about that some other time later too. And Upstart, AI financing, AI loan officers. I mean, this is a good base. It's a really good base. So if you didn't get in at 20 something or 13, this cup here, this base here, I don't know if I could tell you if it's going back to 400, because that was during the bubble era, right? So this thing got IPO'd in December 2020. Good time to IPO. Pump, all the way into October 2021, $400 from IPO price of 22. Now we're going to 68 here. So we touched 85. We pulled back to 68. Yeah, I'm watching this guy. There's a lot of stocks just like this in the ARKF ETF, ARKF. So you see, so not only you got the banks going up, you got these little finance startup type companies. You got Affirm, buy now, pay later. You got Upstart, UPST. Yeah, I'm gonna be looking at those. And Planet Labs. Planet Labs is another space satellite stock. It's going to have earnings later. So the other three I talked about previously already had earnings this week. They're done. So that's why they're going crazy up and down like nuts. This thing's just been following them, but it didn't have its own earnings yet. It's estimated to be Friday, December 6th. So it's going to take a while. So that's another one I'll be watching. I think Tropes was the one that reminded me about Planet Labs. I remember that one. So let's see. Anything else? No. We talked about all those right now. So let's see some Kathy Wood. Kathy Wood of ARK Invest. Let's see what she says. I think I have that video queued up for you guys. Did I download it? What's Upstart? Upstart is a AI finance company. They use AI to decide if you get a loan or not, Momo. So it has that AI, it has that fintech, and fintech is hot, AI is hot, software, boom. It's got the story. They just need to go on CNBC, yap, and that stock would just go back up to 400, right? Just like the trash Carvana. I'm just looking for trash, bro. So this first phase of the bull run is trash. Then after the trash, I move to commodities. I'm just looking for growth stories. Essentially stuff that doesn't really make profit, all right? That's how you do it. You just want to look for great big multiples. That's how. Okay, I didn't download it. Oh man, I thought I downloaded it. All right. Oh my god. What the heck? I thought I downloaded it, man. I don't want to download it again. Where is this thing? Irritating. But yeah, that's the type of stock that's in her ETF, ARK. Okay? ARKK, ARKF, ARKG. Look at all those 3 ETFs. Kathy Wood. She's probably the most hated person on Wall Street, but I don't give a crap. I like momentum. All that, Coinbase, right? Coinbase. Like she has a ton of Coinbase too. She actually sold a bunch of Palantir at the bottoms. I don't know why. Man, she's so bad at timing. Bro, she was one of those early investors in Palantir, and she dumped it all the way at the low. I probably bought shares from her, man. She dumped like millions of shares. Holy billions of shares? No, millions of shares probably, yeah. It's terrible. A lot of people just cannot time anything. That's why technicals is so important to learn. Like it really does give you the timing advantage. So even if you're a fundamental person, some guy that wants to read the 10Q papers and the 10Ks, everything, and study the whole business structure of a company, when do you buy? It's definitely not what the value you think the company is worth. What you think the price should be for a company is only one person, you. It's about the market. It's about the market participants. What do they think something is valued? It doesn't matter if NVIDIA is overpriced. If somebody out there is willing to buy NVIDIA at $500 a share, that order is put out. And if a whole bunch of other people follow that moron to want to bid it up to $500, then NVIDIA is technically $500 a share. It has nothing to do with your 10K financial reports. It has nothing to do with what you think, blah, 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 X, Y, and Z, your growth will be in 10 years and do all this MBA stuff. That doesn't matter at all. At all. All that matters is emotion, greed, fear. That's it. Once you know that, and cycles. And you understand human psychology and human cycles, because we do live in a planet, right, that has solar cycles, lunar cycles, all that astrology shit. Once you understand that, then yeah, that's just how it's gonna be. And I'll get into some cycle stuff towards the end. because I was at the meeting where they were talking about Bitcoin cycles and trying to predict what month the top was going to be. So yeah, we'll see how that goes. I don't even know what fundamentals is. That's just how things were done back in the day. There was these books made by Graham. Oh man. So these finance books, they talked about how to analyze companies and things like that, but yeah, I never got into them because I knew, like, if anybody could understand this stuff and everything was in the public domain, like, so all the SEC gives out reports that are public, right? So anybody that trades on the NASDAQ or NYSE, everything's public. So unless the company is a scam, unless there's a ton of insider trading where people are front running you, like the employees themselves are, but the SEC is very good at detecting people that are lying about certain things. So the only way that things are scammed at this point is generally in the commodities market. So that's why you always hear about, like, oh, Goldman Sachs or JP Morgan trader found out that this dude was front running gold or silver trades or whatever, copper. Yeah, you can cheat there. That's the only other place where, like, it's still, you just get a slap on the wrist and they don't do shit to you. But when you do stuff with stocks where some guy just leaks like financial data or some employee knows there's a merger coming and they trade, yeah, they put the hammer down on that dude. So, but if you're just trading commodities, nah, you get a slap on the wrist. It's just like a speeding ticket. Nah, you cheated too much. Stop it, Goldman, stop it. Yeah, that's about it. But for companies, it's way more serious for some reason. So commodities is futures are run by a different agency called the CFTC, and stocks, equities, bonds is run by the SEC. Okay, so that's, you know, the difference. So the government separates the two. That's why the whole Bitcoin ETF thing was such a big deal, because they couldn't figure out who was controlling which side of the market. It's like, oh, this is our domain. No, this is your domain, blah, blah, blah. So they couldn't figure out if crypto was a commodity, a futures, a security, blah. Yeah, they couldn't figure it out. So they didn't decide whose jurisdiction it belonged to. That's why there's so much ambiguity about crypto. Yeah, I'm glad to, yes, people with preconceived notions tend to do a lot worse. And that's why I said some time ago, I don't know if I can find this presentation, but there was this dude that studied psychology of traders. They found out that people generally who were left brain leaning, so engineers, doctors, lawyers, they did the worst in trading. Yeah, because those people tend not to understand human psychology that well, right? Like, they think everything has to be very logical in the rational sense because they deal with things that have logical structures, like natural law or human-made law. But when you're dealing with humans who trade, the people that don't, believe in stupid stuff, quote unquote pseudoscience, they probably do a lot better. There you go. Yeah. Anyway, so I got the video now. Here you go. Let's play the video with Kathy Wood. Is she a moron? I don't know.
This is the question. The stock has moved materially since the election. And as you know, I think this guy's a genius, Elon Musk, and I think Tesla's done wonderful things. But I'm trying to just understand the price action. I could see somebody make an argument that tariffs that'll prevent other EV makers from China to come in should be helpful. I could see an argument that if the IRA goes away and certain subsidies go away to a Ford and a GM, given where Tesla is in the marketplace, that should be a benefit. I could see, though I'll be very straight with you, I don't like the idea of him having influence over NHTSA per se, because I think that it's very difficult to have somebody who's in a business influencing how the regulation of that business works. But maybe NHTSA opens things up, and therefore he has a greater opportunity to move autopilot and everything ahead faster. The question is, those things and maybe others, does that account for a 30% move in your mind? 35,
Well, it had
30+% move.
Yes, well, it had been very depressed before that. And as you know, we put our research out there. We have our team, Tasha Keeney, Sam Corris, and our price target is $2,600 in 5 years. That research is out there. You can find it. You can look at the model, change anything you want. So autonomous is 90% of that valuation. And we think the probability of autonomous has gone up dramatically. I mean, Waymo's already doing it, and they've broken through a lot of barriers, actually, for Tesla in terms of introducing the concept. Now, Tesla, with 7 million robots on the road already, learning the roads around the United States and the rest of the world. If we have national legislation, we'll be in a very good place.
Kathy, where do you land right now on Bitcoin? You've talked about $500,000 being the price point. I don't know if you changed the time horizon for that, given what's happened. Maybe it's been slower. Maybe now it's speeding up again. What do you think? And what do you think actually drives the price action?
Right. So we have a 2030 target. In our base case, it's around $650,000. In our bull case, it's between $1 and $1.5 million. Now, remember, we were the first public asset manager to gain exposure to Bitcoin in 2015 at $250. And we still, at 90,000, I think we have a long way to go. Why? Well, first of all, we're getting regulatory relief here, and I think that's one of the most important things coming out of this administration. We will get regulatory relief on all kinds of innovation, including healthcare. So the other thing is we're looking at Bitcoin now being viewed as a new asset class. It's not just a global monetary system. It's a new asset class. And what that means is institutions and asset allocators generally are saying, wait a minute, this asset is behaving differently from all of our other assets. We need to include. So I think that's the next big move. And if you look at years where the Bitcoin has halved and the inflation rate has gone down to 0.9, it's usually had a nice big move. So that's
Kathy, before we go, I got to ask you one tough question, and that is back in October, Puck wrote an article that said, why is anyone listening to Kathy Wood? And the author made the point at the time that the funds, the ETF fund, had lost $14.3 billion of shareholder value, which is an enormous amount of money. I don't think it's the same today. It's better than that. But why should people listen to you? By the way, the author gave us a hard time for even doing interviews with you.
So it's so interesting that we cannot fire our clients. And I would say we're at the flip side today of where we were in the late 2021 period. We were saying back then, hold some powder dry. That didn't happen. Flows just gushed in. Today, we're in the opposite situation. We've been great on Tesla, Bitcoin, NVIDIA at 40 cents was our first purchase, 40 cents. We're pounding the table on that. And now we want to go after healthcare, CRISPR gene editing. If you look at J.D. Vance, Elon Musk, they're all talking about this new wave of cures ahead. So stay tuned.
But how should we think about the volatility of your fund and some of these big bets and the way you're making them? I ask because, as I mentioned, there was a period of time, obviously 2020, that ETF blew up in the, your ETF blew up in the best way possible, right? It was up 150% or something. But then, of course, if you look at a longer term chart, it's a lot more complicated. And so for those folks who watch us and are, I'll ask you questions and they're listening to your answers intently, what are they supposed to think?
Two things. We have a volatile fund. We should not be a huge slice of any portfolio. We are more of a satellite strategy now, although we think this is the way the world is going. Second, if you take out that boom bust in around COVID, which caused all kinds of interesting behaviors, you will look at, for the flagship, you'll see a fund that has based for 6 years. The technologies around which we have centered our research are so much more advanced. And so we think we're a very good complement to the broad-based benchmarks out there because we don't look anything like them. And truth will win out. The biggest depressant on the fund recently has been in the multi-omics, healthcare, life sciences space. We think that's going to change, and it's going to change quickly when it does because the rubber band is stretching. We're now seeing companies like CRISPR Therapeutics, Intellia, on the road to curing diseases, which is a very different model from traditional pharma.
Kathy Wood, we very much appreciate talking to you, and I appreciate you taking those questions as well. So thank you.
Of course. Thank you very much, Andrew.
All right. You heard it. You heard it. That's the 3 ETFs that she manages. That's the main ones. ARKK, ARKF for the fintech, ARKG for all that CRISPR stuff she was talking about. So if you were interested, look up those 3, see what they hold. There's actually tons of websites that tell you when she bought something, when she sold something. You can look it up, Kathy Wood Tracker or something like that. Same thing with like the looking at Congress, what did they buy, what did they sell, and you'll see like what the timing she had. She had pretty bad timing. She offloaded some Palantir right at the bottom, so she's not good at timing. But you can at least just follow what she has or what she did have before, because sometimes they might come around. Yeah, so because these things are ETFs. Most people are just like, oh yeah, that's the whole way it is. There's more actively managed ETFs nowadays. They package them. I did have a video talking about this one dude. They construct ETFs by looking at stocks that get booted off the index. So stocks that had to get kicked out of the S&P, NASDAQ, Russell, like they get stuck into that ETF. It's a pretty interesting strategy, I thought. So, but many of these things you can replicate yourself if you want to spend the time. But let's go back here to the chart. So I'm going to put a link in the chat. If you want to know about point and figure charting, go to this link, Stock Charts TV, and then you search point and figure. So I gave the whole link for you. So it should auto man, did I misspell figure on that thing? Crap, whatever. You get the point. But yeah, point and figure. It should work anyway. Point and figure. And you look for the icon, the thumbnail with Bruce Fraser, this old white guy on it. So look for Bruce Fraser. Like he's the best, like doing this stuff. There's tons of people that talk about point and figure and using projections and things like that, but this dude, like he uses the Wyckoff, so he's in doing that stuff. Man, everything is so spot on. Like the prices he gets, way good. So let me see. Yeah, okay. I spelled. So this is what you should be looking for, Bruce Fraser. So anything that has his face on it, Bruce Fraser. That's it. Get it. Go watch the videos. He has like multi-part tutorials on how to do this yourself. But I'm going to do this really quickly right now for you right here. So this is ARK. Okay, this is a point and figure chart. Point and figure charts are a different way of looking at things. Okay, they price charts, like, you just have all this like scriggle scraggle, candles, bars. No, point figure just strips out all the way the noise. It's like you're just looking at the structure now when you're looking at point figures. This is how they did it back in the old days before computers. So people didn't have the time to be like, okay, what price did it open or close every hour, every day? They were too lazy. They're like, man, whatever. Did it go above or below a certain price? If it did, I'll put an X. If it didn't, I won't put an X. If it went down, I'll put an O. All right, and go to the next column. That's how it was done back in the days. So it's like tic-tac-toe. That's why I call it tic-tac-toe looking type of chart, because it just has X's and O's on it. Now, if you look at the red here, these represents the months. Okay, 3, 1, 3, 6, B. So what all this stuff represents is 1 is January, 3 is March. All right. Okay, you get that? And then once you get through September will be 9. And then instead of writing a 10, they would write A. right, for October, B for November, and C for December. And then you start all over again with 1, 2, 3, 4. So you get that? Okay. So you kind of understand how to read this thing. Now, you can count them. So how many columns there are, and this will give you your count. So let's say this is distribution. So I say like, okay, this thing goes count. So it made a new high, and then all of a sudden it crashes through and cuts down below this 100 area. Then I say, okay, that means I'm going to use these counts 1, 2, 3, 4, 5, 6 to figure out what price I'm going to go towards. Because let's say this continues on down. That's how it works. So now we see this, right? You can do the same thing here. You can count from maybe here. Maybe I'll count here because this was the last time it was low. I can count 1, 2, 3, 4, 5, 6, 7, 8. I can count 8 and use that to figure out how high I'm going to go. Because once this thing broke out of here, I'm like, all right, now I know this thing is going to continue on up. So here we're looking at this. So these two areas here, the 53, we've broken out right now. Now, if we look at our normal chart here, I'll just erase this. You see these two blinds, these two Scion lines. This was the last high in September 2018. 2018 is very important because 2018 at the time was before Jerome Powell kept hiking rates and doing QT, and then he finally said like, nah. So in January he gave up. So at that point we stopped doing QT. So that's why the market recovered at that point. Now, this last high was just before COVID, February 2020. So these 2 points are pretty important, like posts before the actual move from COVID. And this whole move was because of liquidity from quantitative easing. All right. That's QE. QT is quantitative tightening. So when Jerome Powell was taking away the money, it was going down. When Jerome Powell put back in the money, it went up. And that's why you have a lot of people talking about, conspiracies that COVID was done on purpose because then they had an excuse to put back QE. Possible. Because from between January 2019 and March 2020, the Fed couldn't do anything. They were stuck. At that point in time. So what we're seeing now is hopefully a repeat back up. I'm not going to say it's going to go back up to 160, but let's see what these things say. So how many columns do we have? I'm going to count from here, this last low, okay? And this low is essentially the 2023, late 2022 low. So December 2022 into January 2023. So that's a good time. So let's put that low there, and then I'll say like it's accumulating from this point to this point. So 1, 2, 3, 4, 5, 6, 7, 8 columns. 8 columns. Now, how do I figure out what the price is? I have to do this because what I did for the settings was I used a 3-box reversal and a box size of 5%. I use percentage. Now, when you use percentage, you got to do this. So let's do this. Let's do the math. So 5%, that's basically 1.05. 3-box reversal. Okay, I have 3-box reversal. And how many columns did I say again? 1, 2, 3, 4, 5, 6, 7, 8. So 8 times 3 is 24. Okay, so this means 1.05 to the power of 24. Okay, here. I'll take a screenshot of my calculator. And I'll paste it here for you guys. Okay, that's it. Here you go. So 1.05 to the power 24. 24 is 3 times how many columns I said was 8, right? So that's 24. And that's 3.22, blah, 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 whatever. So now I have that. So what do I do with this number? Well, what's the bottom of this range? This bottom of this range is probably around 30 bucks. So let's say about 30 bucks. What's the top of this structure here? Maybe I'll say 52. So between 30 bucks and 52 bucks. So that's my box. So the upper bound and lower bound is set by those two numbers. So 30 bucks times this number is 97. 97 is the bottom. Okay. And then if I take that number, times it by 52, my upper range is about 168. Okay. So I can I'll copy paste that from the calculator and put it here. There you go. Right there. So that's it. So let's see, 96 around here up to 96. Yeah, around here, and then 60. Wait, is that right? Yeah, I multiply with 167. Man, this thing covering it up. Well, of course that's not right. Oh, damn. Well, it's above the last high. So it's gonna go, it could go way above here. I don't know. Maybe that's too optimistic. But yeah, so it could be 96 all the way up to 167, 168. So that's pretty much just slightly above that last high here, made in I think this was February 2021, right? Yeah. 1-2. Yeah, that number 2 signifies it was February. Okay. Good. Well, all right. So I got my price range. So let's take this away. Okay, let's move this around. Blah blah blah. So let me do some more math here. And I still owe you one for Tesla. I didn't do it for Tesla. I mentioned it last week, but I didn't do it. And the last week's Friday video got deleted for some reason. I don't know why. I'll have to replay that in case some people missed it. Okay, we're here now. So let's say we go up to 96-ish. So that's about 80% if I get to 96. And if it gets to 167, 168, maybe that's 200 something percent. So let's say about 200. All right, let's just do 200. And let me do halfway between the two. So 80 to 200%. So let's say maybe 140. All right, let's give it a 140. The reason I did that is because I'm going to do the 2X ETF. So there is a 2X ETF called TARK, T-A-R-K. So it follows ARK 2 times. If Cathie Wood is in a good cycle, so a lot of her stocks are in the right time to move up, and I said it's around averaging 140%, right? Halfway between the two targets. Then we should do 2 times it. 2 times it percentage-wise is 240, right? 240, 280? It's 280, right? Yeah, I said 140, so this has to be 280. $300. So TARK right now is about $80. So maybe if this goes smoothly up into next year in more or less a straight line, then I could see it going from 80 to $300. So that is a 280% gain right there from that. And if you're more adventurous, you can look at the stocks in her ETF and find stocks that probably will outperform this. But if you're lazy and you don't have time for that, you can just get ARK, or you can buy TARK, T-A-R-K, and get the 2X effort. All right. So there you go. And let's look at some junk stocks. I don't know if these are in ARK, but I would bet you that these are the type of stocks that would be in ARK. Like Sound. Sound had earnings today. 2 days ago. SoundHound AI stock here. It has shares owned by Nvidia, so they're funded by them, and it's been getting stuck in this box twice now. So March and now. I wouldn't be surprised if it tried to break out in December. So I'm watching this one, SOUN. Another one that Nvidia is investing in is RXRX. They use AI to work on drugs. And today we got a nice crush right down below this blue area. So I'm watching this one too. I bought some already because it's like $6, whatever. I'll buy it here. I'll give it a chance. If it goes down to 5, worst case, I'll buy some more. So this one I'm looking at, RXRX. Okay, so let's see. What other stocks to talk about? I was going to discuss some uranium, but maybe I won't get into too much of that. TARC I covered. This one I covered. Yeah, uranium is a whole section to cover. I covered the psychedelics. Okay, let's play a video first. I want to play another video. So this one I want to bring up because, you know, the White John Galt, aka oh yeah, excuse me. Yeah, so he was saying like sell everything, everything's gonna crash, blah blah blah. Okay, I'll tell you guys this. Okay, even if you can you distinguish between a dip and a crash for me? Like, let's be real. So one way to figure out if the stock market is actually gonna take a dump, a real dump, is through something called the Hindenburg indicator. So let me Hindenburg omen or whatever. Let me play this video for you guys. It's a little bit long, but I think it's important to understand because we talked about secondary indicators before and things like that. Like, do not confuse dips with crashes or thinking like every dip is going to be a crash. You will get burnt real bad. Okay, and understand when something is a correction, a dip, a crash. Like, we got to be more specific about these things.
Hey guys, Dave Keller here with Market Misbehavior. The Hindenburg Omen is a widely followed macro technical indicator focusing on three particular components. Earlier in the month of May, the Hindenburg Omen signaled an initial sell signal. I'll show you today those three components, what we would need to see to confirm a sell signal, which has happened at major market tops going back through history. Before we get to the Hindenburg Omen, some key charts to watch. Here's one more thing I wanted to tell you about. I'm a technical analyst, which means I
get through the ad.
Data like the investors.
Okay.
Having a what a quantitative
shilling
all
what's a shilling
opportunities within a individual investor in 2024. You have access to a pretty deep /seeking alpha, be able to take advantage of their
he's advertising for
but
over
also
a minute.
Look to see if the quantitative model
all right
information usually get a better deal for you. It's an affiliate link, which means
almost there, guys.
Let's get back to the charts here. So the Hindenburg Omen has a name that has a very ominous sound, and for good reason. A lot of major market tops have occurred after a confirmed Hindenburg sell signal. Today we're going to talk about the Hindenburg Omen, the three different components, what they're telling us right now, and why we need a confirmation which would line up with previous market tops. Here's a chart of the S&P 500, and on stockcharts.com there's an indicator. It uses this ticker here, !BINYHOD. What that basically does is track the components of the Hindenburg Omen. If all three of them are not signaling, it's at a 0. If all three of them are signaling, it's at a +3. And it's meant to just track those three signals. When all three of them are firing, we have a +3. That tells us we have at least had an initial signal. Now, we just had this signal here over the last week when all three of the components signaled. And those three components are, number one, the market has to be in an uptrend. Number two, we have to have an expansion in new highs and in new lows. And number three, the breadth has to turn negative. In a minute, I'll show you a chart with all three of those components broken out so you can understand them a little bit more clearly. But first, let's look at the last time that this happened. The last time we had a confirmed sell signal, which means we need to have all three of those components firing 2 times within 1 month, right? So within 1 month of trading, you have multiple signals where all three of them are firing. Last time we had that was at the end of 2021, just before that sell-off through most of 2022, leading into the low in October of 2022. Back in December and then of 2021 and then January of 2022, we had multiple Hindenburg Omen sell signals all firing, right? So multiple times as the market was still going up, you had this combination of factors. You can see what happened soon after that. So what is this indicator actually tracking? Here's a little more busy chart, but it will give you the three components laid out. So here we have the S&P 500, and I've highlighted in purple. That was that 2021 top we were talking about. You see the previous two times that we had it was just before the COVID drop in the first quarter of 2020, actually signaled in February of 2020, and before that, July and August of 2019. These panels basically illustrate those three components. And at the bottom, we have this composite indicator tracking the performance. So number one, the trend needs to be positive. And what Jim Mieka, who originally envisioned and created this indicator and popularized it, a couple different ways we can do it, but based on his work, we are looking at the 50-day rate of change of the New York Composite Index, which on stockcharts.com is $NYA. I'm showing the S&P 500 here. The New York Composite Index, pretty similar. And basically, we want the market right now, the New York Composite Index today, to be higher than it was 50 days ago. So basically, for the last 10 weeks, the New York Composite Index has been moving up is the general measurement. So number one, we're in an uptrend, which we certainly are by any stretch of the imagination, going back for the last couple months for the S&P 500, for the Qs, for the NASDAQ, for the New York Composite Index. Second component, this is an important one, is that you need a good number of new highs and new lows. What Jim Mieka found as he was analyzing previous major market tops was it wasn't that at the top you had a ton of new highs, and it wasn't at the top that you had a ton of new lows telling you stocks were already breaking down. You actually had a lot of both. There's this pattern of indecision, which often happens at the end of a bull market phase, right? Everything's kind of working, but then all of a sudden you have this bifurcation where some stocks are still kind of working in a big way. Some stocks are actually starting to not work in a big way. Does that sound familiar at all with what we're experiencing here as we wrap May of 2024? 100%, right? You have those growth mega cap names like a Netflix, like Nvidia, making new all-time highs, Meta, Alphabet, all of those ripping to the upside. You have plenty of stocks that are just not working. You don't have to look much further than consumer staples or some energy names that have rotated lower, some consumer discretionary names that have been in consistent downtrend, some media or entertainment names, communication services like Disney that have just had these horrible charts. So you actually have this indication right now that some things are working and some things are very much not. So what this indicator, the second component, actually tracks is the number of stocks, or the percent of stocks making new 52-week highs and the percent of stocks making new 52-week lows. A couple different ways people tend to measure this particular component. What we are doing here using the stock charts methodology is at least 2.5% of the NYSE listings are making a new 52-week high, and at least 2.5% are making a new 52-week low on the same day. And if that happens on the same day, second component is a thumbs up. The third component is looking at market breadth, and basically the McClellan oscillator needs to go below zero. The McClellan oscillator is basically a measure of market breadth. It's looking at the advanced decline line on the S&P 500, looking at the general rate of change, basically using the exponential moving averages of that advanced decline data. And if it is above zero, that means the breadth overall is supportive on the tactical time frame. The McClellan oscillator is above zero and then tips back below. That tells you the breadth is going from more positive to more negative. And so when that third component happened over the last week, that completes the third component. That's why the composite indicator for the McClellan oscillator went to +3, suggesting we do have an initial sell signal. Now, we did get an initial sell signal back in February. We actually did a video on this channel talking about that initial sell signal and what it potentially would mean, but we made the clear point, which I'll make again now. The key with this Hindenburg omen is that you need to have multiple signals within about a month of each other's. Different ways people tend to measure. We go with about a calendar month, so about 30 days or 20 trading days. We would need the indicator to reset, and then we would need it once again to signal a sell signal. So what would need to happen going into June, if you think we're now sort of mid-late May, we've gotten that initial signal, what we need to see over the next 3 or 4 weeks to complete and have a valid Hindenburg omen sell signal like we did at the end of 2021? Well, number one, we would need the rate of change to go back positive. It's actually still slightly negative as we end the month of May for the last 50 days. Would not take much to make that a positive number. We just needed to be above zero for the last 50 days. and then it could once again reinitiate that cycle. So number one, rate of change has to be back positive. We'll pretty clear that would happen if we get any rebound in stocks. Number two, we would have to have, once again, an expansion in new highs and new lows, which means some stocks are going to have to keep working. Some stocks are very much going to have to not keep working to validate that second component. The third component, the McClellan oscillator needs to go back above zero. Wouldn't take much of positive breadth rotation in the short term to turn that oscillator back positive, because it's very sensitive, it's very tactical, very short-term oriented. So a quick pop back higher would be able to reinitiate, and a turn back below the zero line would be that third component. So this chart is an important one to watch as we go into June. What you have to remember is that if you look back for the last 5 years, we've had a major market top every summer, June, July, or August. We've had a top. Maybe this initial sell reading that we had from the Hindenburg Omen earlier in the month of May is that first signal. We have a second signal in June. That could signal that we are very, very close at or near a major market top. So keep an eye on this chart.
Alrighty, guys. I think you get the idea. Now, here, I'll show you what the Hindenburg Omen thing looks like now. Okay. And I'll give you a little bonus. I can have another signal tell me what the bottoms are. So if this tells me the tops, what's another way of figuring out the bottoms? So this is the Hindenburg Omen. So you can look at stock charts. It's symbol exclamation point BINYHOD. Okay. So you can go to stock charts and find that. BINYHOD, and you go to stockcharts.com. Okay, and we can look it up. So this uses the New York Stock Exchange to do the Hindenburg Omen. Now you see this. So when you hit 3, bad times are coming. Now you can hit 3, but it doesn't mean anything. Now you look at this one, right? Look at this one here. A bunch of signals happen. Boom, 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 boom. Guess what? When did that happen? Just before the crash in COVID. How many people were already dumping right into there before COVID happened? They already knew. And how about here? In the 2018, before the junk bond crash, which crashed the whole stock market later on. So the 2018 crash in Q4 also many times. Now, sometimes you get this where nothing happens, like this one, but then later on you get something, and then, okay, you got a minor crash, but still it was a minor crash. So there's no guarantees in these signals. You're going to have to use other secondary indicators, but yes, these can be used in your toolkit. You got to have a toolkit. You got to have a set of things to look at the market conditions, because I'm not going to be trading the same way I am if I know I'm going to get into a condition like this where the volatility increases, everything starts going down. When you trade stocks, you're going to do it differently depending on the overall market condition. Okay, when volatility increases, that means I'm probably not going to make big bets. When I know volatility is weak right now, like now, I'm going to make big bets on every dip. Every time the market dips, I'm going to make a huge bet. So I'm going to put more money into a buy. But when I have something like this, if I'm doing a long or short or whatever, I'm going to have to be very tactical, because even though the market is going down, like here in 2022, you see the rallies were huge. These rallies are vicious. So even though it's going to go drop another leg, the push up is also very vicious. So volatility, yeah, it's a dangerous game. If you can't time it correctly, your account can get destroyed very quickly, just because you think, oh, it's going to go up now, or oh, it's going to go down now. If you can't time it really well, don't even bother playing. Like, maybe for most people as investors, like when you see this omen hit, you're running away. Like, I'm staying away until I know there's a clear bottom. Like, I'm not even touching it. So a lot of people during COVID, they might have not even like touched it, even when they hit a bottom here in March, and then Jerome Powell was like, okay, we're gonna reboot the money printer. Maybe you would still stay cautious because you don't know how long it would take for the market to realize this. Let's say you're very ignorant. Like for those people, it's probably they would wait until April, 1 month later, when they already it already recovered maybe 50% of this move, then they'll buy. So that's not too bad. Like you didn't get the absolute low, but at least you got in here and went all the way up until 2021, right? But in any case, there's many ways to figure out when a top is in. Okay, don't ever tell me people like, I can't time the market. You can't time the market. Well, what is this stuff then? Like, there you go. All right. So I have something else that will tell you about the bottoms. So here's another indicator, and I'm not going to get into it right now, but I'll just tell you this because it will at least give you an idea that it's possible to find bottoms too, and this is just one of those indicators. There's tons of other ones. Yeah, there's tons of other ones. You know, there's so many that I probably forgot about them. I put it in a list somewhere. So this one's interesting. I think it was Marty Swag. Marty Swag was the one that figured this one out. Let me see. Is this his indicator? Breath thrust. Yeah, it's Marty Swag. Let me find how to spell his last name. This guy was very famous. Very famous dude. Here, this is his name. You can look it up. Marty Swag. You can look it up. You can look up his indicator. It's called a breath thrust. So you can use this one here to find bottoms. Okay. Many times it finds like pretty good bottoms, you know. It's not going to find every bottom, but it can find pretty good ones. So here, I'm going to put up the symbol there. You see it on the upper left. So you can go to stock charts. It's called BINYPTD. So when you're in a big downtrend, you can use this to determine like if there's a bottom. Now, you see here in the 2021, it didn't find the exact bottom because the exact bottom was here, but it's close. It found the initial bottom in this area in the summer, and then we retested it in November in 2022, right here, 2022, my bad, 2022. So it's not perfect, all right? And you can get other indicators probably better than this, but I just gave you a little teaser because this stuff is not like hidden knowledge. Okay, this is quite open, but it's just that most retail won't look for these. So BINYBTD breath thrust. So it's by Marty Swag. Marty Swag wrote a book or two. I don't know. So maybe it's interesting from a historical point of view to read him. Okay, guys. That's it for that. Let's get into some uranium stocks. Let's see what we got here. Uranium. Okay, URNM. That is the ETF for miners, URNM, Sprott Uranium Miners ETF. So you can see it was indecisive, but I did say that it would retest 45-ish, and I think it is because that's 45 is about 50% of this move. So if you got that area, you're looking to buy probably here. When it keeps hitting 44, 45, you're probably looking to buy. So the news today did not last more than several hours because most of those stocks, they went back down. The other one is URNJ, the junior miners. So it's a lot weaker here. These are more volatile than the main miners, which consists mainly of CCJ. So that's the main Canadian miner. It's still doing very well. the chart here is a lot better than the ETF. So the broad mining ETF isn't doing as well as this one. So that's a good sign. The leader, at least the Canadian leader, Cameco Corporation, CCJ, I mean, so it's doing well. So let's look at the other ones, the infrastructure type uranium companies. LTBR, see, now it's retesting 6. I'm watching it, see if it holds. If it holds, then see you at 14 later on. NNE, it's an IPO, not much history, hard to say. It tested 16, it bounced up. Still, yeah, I can't give you an opinion on this one. There's not enough history in the past to tell me, but it's definitely something you should put on the watch list. Nano Nuclear Energy, NNE. The previous one was Lightbridge Corporation, LTBR. And then last one, Centrus Energy Corporation, LEU. Yep. All right. So it finally gave up. I think we're going to see 53 again. So I'll be watching that area for LEU. Now, the other ones are GEV, GE Veranova. So they do servicing of nuclear reactors. So they're a spinoff of GE. It's done quite well from its IPO after the spinoff from August till November. This is a big move. So it doesn't have much history either. So I can't recommend it. I need to see how it tests halfway through here, because if this is the first red bar and it's going to pull back, then I want to see it do 50% of this, right? So probably around 220, 225. I want to see what it does there. The other one is, let me see, what's the other one? Is there another uranium stock I was thinking about? Oh, yeah, this is a utility company, but because it has a lot of nuclear power plants, and it went down because, not because of earnings, but because the federal government didn't want to allow it. I talked about it several streams ago, probably last week, where they said, no, we don't allow you to give so much power to data centers like Amazon and all of them. So that's why it's kind of getting punished. Now we'll see if it gets to 200. If this thing pinches, so the 40 and 18 moving average for the weekly, if it pinches here, I'll see like between the 200 and maybe 215 area. See if it's a buy at that point. So that's a good utility stock to have. And speaking of utilities, I am in Hawaiian Electric. Now it did its earnings last Friday. Monday it crashed. Now it pulled back up today, back up to 10. I think we're ready to go back up to 15 again, and maybe 21. So, yep, HE is something to look at for a utility stock. And PCG, Northern California utility, it's making its way up in this box. So I'll put the monthly chart for you. Right here, this is when we had the wildfires and it was going to go bankrupt because it's like, oh, they got to pay all the victims of the wildfires in California. Now that's all settled. It's been how many years? So January 2019 all the way to just September 2022. After this, you got this candle. It was done. It finished. It's going to reinstate dividends right here. So they pay 1 penny a share. It's nothing. That dividend is nothing, but it's a token signal. It's a token signal saying that they are comfortable with paying investors because they're all done with paying the wildfire victims. Once it breaks out of this box, right, $23, $24 a share, it should easily go back up to 47, 48, and then eventually 70. And if utility companies are going to be a big deal because of data center, AI, all that stuff, then yeah, we have a win. And let's talk about Texas utilities. I think it's BKG or something. It's a new IPO. Let me see if I put this on a list somewhere, because I talked about it in the previous streams. At one point, BKV. This is a new IPO. It closed out this week at 5%, last week at 10. It had earnings already. You know, it doesn't have history, but man, so you got a Texas utility right here with natural gas and all that stuff. I would say, this is new potential. This is new potential here. And I forgot to talk about SE. SE, did it break out already? So this Indonesian trash company. Let me see. Dang, yeah, I like this. I like this. It's touched here. I'm gonna wait for this moving average to come back. It's gone halfway of this. Oh yeah, man. So it's already went from 30 to 102. Now I'm trying to see if it's trying to get back up to the old high. Yeah, so keep this in your watch list. SEC Limited. Okay. There you go. SI Leap. Oh man, you're gonna do Leap options on the CKJ3. Yeah, good luck. Ooh, this is gambling, baby. There you go. Here's your Leap options. Are you still doing ASML? ASML went back to its old lows. I don't know how the options market for ASML is because semiconducors got its ass kicked today. So we're right back to where we started. Right here at 680.58 on ASML. So I don't know if you're still looking at those call options. So I don't know how the pricing is for that one, but yeah, take a look at those. But honestly, yeah, I think the semiconductors is its last legs. I think we're gonna get one last push up on semiconductors. So if Samantha is right, then let's see what she said. SMH to about maybe 270-ish. Maybe more, maybe 290. I don't know if it's going to get to 300. But after that, we're done with semiconductors. So that's it. Yeah. So, yeah, check out ASML. That might be the play to make. But this will be the last play to make for semiconductors. We're done with semiconductors. It's all about Bitcoin, crypto trash, ARK investment trash, everything. Oh, I'll talk about Zim too. Zim still trying to break out. I am holding Zim. It has earnings next week on the 20th. We'll see how it goes. Nova, man, last stream I talked about Nova, and within 1 hour later, it jumped up 15%. This is great for trading. So if you're a day trader, for sure, Nova should be on your list. It doesn't matter if you give a crap about solar, you believe in solar. It doesn't matter. This thing is so volatile. Like you could just trade this up and down forever, and because it's at a bottom, because you see it undercut this area. So all the people that bought here, when it crashed, they sold, right? They were freaking out. They probably been like, oh, Trump won. Oh man, earnings sucked. I'm getting the hell out. Guess what? When you run out of sellers, the stock can't go down anymore. So there's a lot of pressure now to go up because the only way to get liquidity is you need to have sellers to look for it. Okay, CKJ3 says ASML have a target for 635.87 cents to turn. So there you go. You got two suggestions here. SMCI. I have SMCI. He also wants to do ASML. Probably not a bad idea. So let's talk about SMCI. Let's see. So yeah, I got a bunch already below 17. So it kind of undercut a bit here. See that move here? Now it's retesting this. So by Monday, all the bad news is already out. They already said like they can't meet the deadline this Saturday. It's done. So either they get whatever. And I see it's after hours, it's up 17% for some reason. So whatever. They probably is like, there's no more reason to sell, right? So it's up 17% after hours for some reason, this thing. So let's see how it goes on Monday. Let's cross my fingers. Anyhow, yeah, good. And the last thing I want to say was hymns, right? Hymns. So I've been looking at this. I think so. Oh yeah, I forgot because this reminds me. So his ghetto points of view, he was talking about You wanted to ask about the right up here, telehealth. So if you rewatch this video, his ghetto points of view, if you come back here, I'm going to talk about it right now. So telehealth, HIMSS. So the Amazon news, they were saying they're getting into like a lot of the healthcare stuff. So that kind of like have a knee-jerk reaction to HIMSS. Perfect. This is exactly what I want. But it might have not just been Amazon that was doing this damage, because if you look at XBI, look at it. So the whole sector was going down. So it probably just because of ETF effects, where, you know, a lot of stocks are in ETFs. When a whole sector goes down that badly, there's no way you can escape the gravity well. All right. So it might have not just been just because, oh, Amazon, because the news, they always try to make up a reason for why a stock will go up and down, and they don't have no clue what the reason why. And I told you the reason why before it happened. It's options expiration week. Okay. So maybe that's why HIMSS had to do this reaction. And if you do telehealth and things like that, you should also look at insurance companies. So these smaller players in the health insurance game, Clove, CLOV, and OSCR, Oscar, definitely should look into them as well. They all are related, interrelated type of companies, because they're all small and they're all trying to make their way into healthcare as small players. So the main telehealth company was TDoc. TDoc used to be the darling company, Teladoc, in 2018. So I played this stock back in those days, okay? So the 2017, 2018 boom rush here. Now it took a break, and the COVID thing kind of pushed it up, and Teladoc used to be in the ARK ETF. I think the ARK ETF, you know, they kicked out Teladoc. So Teladoc, TDoc is not in that ETF anymore, I think. But I've noticed the chart has went round trip. So we went from 9 to 280, 290, back to 9. It had a little dip, undercut at 7, and now it bounced back to 9. So trash company, trash stocks like this before New Year's gets me interested. Gets me very interested. Same thing with Rivian, I think. Rivian is another one. Yeah, see? It's $10. It used to be at 170, 180 when it IPO'd. I'm not saying it's a good company or not. I mean, I've seen their cars around. Doesn't mean anything, though. But when you have companies like this going into New Year's, a lot of sellers will just sell because of tax loss reasons. If they run out of sellers, these stocks can just bounce they just bounce. They'll just bounce. There's no fundamental reason. I don't care about fundamentals. I'm just here to trade. So when I look at stocks like this, these are potential trades. So keep these in mind. Rivian, RIVN, TDoc, TDOC. They could just make a comeback, at least for a quarter, at least for 3 months, maybe. Okay, so CKJ3 says ASML turnaround target is back to 835. All right, there you go. ASML option calls are pretty expensive. I don't know if the chat have capital for those prices. Oh man, the premium's high, huh? Yeah, leaps usually are, though. Leaps are always generally high. So if people are very confident in a company, yeah, the leap calls will just be outrageously high anyhow. So anyway, and these leaps are like 2 years out, right? 1, 2 years, maybe even 3. So that makes sense why the premiums would be so much. All righty, so almost 3 hours. We got. Let me see if I missed any tickers. Oh, I was gonna talk about Boeing. Oh man, Boeing. Look at this baby here. See? Oh yeah. Perfect. It's at the bottom of its range. Now, if a lot of people sell it for tax loss reasons into next month, oh man, Boeing. If you need a stock for your long-term portfolio, Boeing is probably it. So, you know, the government isn't going to let it bankrupt. So if you get it for a good deal at 120, go for it. Intel, Right now Intel's doing what it can to try to stay above this range of 19 and 21. I mean, worst case, I was thinking like, yeah, it could hit 13, but it doesn't look like that's going to happen. But I don't know, maybe Nvidia's earnings will cause issues with it, maybe not. So I would say, yeah, maybe we actually found the real bottom. So it's not going to go below 20 again. But of course, we know if this is the end of the semiconductor move next quarter, maybe it will retest 20 one more time. And at that point, you got to figure out what you're going to do, because I don't know if it's going to make a quick move back up here to 35, but maybe the first quarter it will try to at least get to 30, maybe from 20. That's a 50% move right there. So keep that in mind, just in case you want to do it. But yep. So healthcare down. You see that healthcare sector, XLV ETF. That's bad. XLU, the only one that's done really well so far. So out of all the safety sectors, utilities, staples, and healthcare, XLU still performs well. And you see the reason why the NASDAQ, the S&P went down was because we got hit in the technology sector led by AMAT. AMAT, Applied Materials, did earnings. And I think also because Jerome Powell said, and this is the last thing I'll present, Jerome Powell, just before the close yesterday, said something about December interest rates. The interest rates for December, he says like the market shouldn't think it's a slam dunk that he's going to cut it. He might just hold the interest rates next time they meet. So that's kind of why. But, the market didn't really take notice of it. The bond market even didn't really care too much. So that's why I was thinking like, yeah, we're just going to get a dip. All right, guys. So today we'll get a dip. Maybe Monday we'll get another dip. And then from there, we can continue on up into December. All right. So happy Turkey Day. Yeah, you can see this right here. You see the probabilities. So the current interest rate is 4.50 to 4.75 set by the Fed. And this is for December's meeting. And yesterday, it was 72% that it will be cut. So we would cut 250 basis points. So that's basically 4.50 down to 4.25. Okay. Now it's a 50-50, nearly so it's 60-40, but that's pretty much a 50-50. It's a coin flip now. So that's kind of why, like, oh shoot, like maybe it's not gonna be that aggressive, but you don't want it to be too aggressive anyway. You like the Fed to say the economy is still strong. If they start cutting too rapidly, that will be more worrying sign. So I expect on Monday, the XBI, the IWM, so the small cap sectors to return into next week. And then from there, it's going to be a light week into Thanksgiving. So nobody will really trade Thanksgiving week. All right. It'll be a light volume week. So get everything done next week, get everything settled, figure out your positions, get done. And then after that, relax, chill out. All right. There will be nothing going on for Thanksgiving unless another Omicron variant comes around. Like, Jesus. Only COVID. And during that time, things were crazy. Usually nobody cares, okay, about holiday weeks. There's going to be no gotchas. There were plenty of gotchas back then, but there shouldn't be any gotchas nowadays. We're done with that, right? COVID ain't coming back. I don't care about monkeypox or any of that stuff. Okay, so, and one more thing about silver. And actually, I do have a video on silver, and I'll play this some other time. So I have one queued up for you guys with the dollar milkshake theory guy, Johnson Forgot his first name, but you can look it up. Dollar milkshake theory. And we can look at silver here. So EXK is still my favorite silver. So it's been doing quite well. It's been fighting, you know, compared to the other gold and silver miners. It's been fighting. It's been fighting. Trying to hold this $4 area. And it pushed it. It almost got through to 5, but pulled back. So yeah, I still say this is my favorite. And if we're talking about miners, let's go to Bitcoin miners. Hut might be my new favorite. Okay, if you're looking one to buy, you know, I still say go for the top ones like Mara, and then you can do a secondary top one like CLSK, but ignore Riot and all that, because it's just, forget them. Okay, they're probably not going to perform that well anyway. But Hut, yeah, it's turning out to be my favorite Canadian one, because the other two Canadian ones is Bitfarm and Hive, but Hut, after earnings, the way it's performing, it has a lot better looking chart now. So Hut might be the one I'll recommend more and more as the time goes on. Wolf, Gwyneth Paltrow's favorite Bitcoin miner, still one of the good ones, and it's just recently broken out of 6, went to 9. That's 50%, pulled back. Yeah, you guys still got time to jump back in on Monday. So let's see how Bitcoin does. Definitely watching this over the weekend and see how Ethereum goes, if Ethereum wants to catch up. But I think we're going to go sideways a bit into next week. I don't think this move will be the final move. I think we still got to build out of range. This thing still has to work. Yeah, I still got a lot of work to do here. I think so. I don't think this is just going to just snap up into 100 right away. I think we just got to still work around 90. Worst case, as I said, the worst case is if this is another false move, it crashes back into Monday, goes back here to 85, has to work down here. But at that point, I would say, yeah, we might have to retest 85, 80 before we jump back up for December. So that could be what's going to happen in Thanksgiving. It'll just fool people, trap people a little bit, go into Thanksgiving a little down, and then you buy into Thanksgiving, like Black Friday, because Black Friday you could trade on the stock market. So that might have some influence on the crypto markets when some people are trading in the half day on the Black Friday. So watch for Black Friday when we get there. That's probably another thing to look at. So, okay, I think I covered everything I need to cover. Little mention of TMC. TMC had earnings. TMC is the metals company, so they do mining undersea. So it kind of went down a bit, but it recovered. So I'm going to watch this one. TMC is still a $1 stock, but it can easily go back to 2 or more again, especially with Trump in office. And then Disney did quite well. So whatever earnings it did on Thursday, it's continuing on today. So I think this could be a good base. Yeah, so it touched it multiple times. I mean, I'm not going to say maybe it's going back to 200, but say what you will about Disney, but you know, the chart looks okay. So Disney, DIS. And then lastly, Nvidia, the earnings that everyone's afraid of next Wednesday. This is the big kahuna. This is the one that's holding up pretty much all the markets right now. Everybody's waiting on the results for this guy. We are here. And when you look at the monthly chart, it's pretty scary. I mean, honestly, I don't know. This thing is going very far away from this. It's so parabolic. The earnings has to be really good. They just cannot say anything that's less than spectacular at this point. So it's very dangerous. So if it does well, we got one more quarter until the next earnings season to worry about. So hopefully this will rescue the semiconductors and we're fine. All right, guys, I'll see you around 3 hours Yeah, so support the channel. Support the channel. Donate to Portia. Give her the money. $PORSHAJAYE on Cash App. And if you have PayPal, you can just do her email, Portia@jghb.info. Okay. Alrighty. Okay, I'll see you around. See you around.